The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will, along with my guest today, our co-host, not a guest, he's a co-host. His name is Matty Ghost. Welcome, brother.
Oh, yo, what's going on? What's going on?
Yeah. I'm gonna kick a little bit. Let me get my screen set up right. Get the chart going. So talked little pennies last week, little farmer pennies last week.
Yeah.
And, I made a little portfolio here of on my site investing.com. I got this other category here, sin stocks. I'll be talking about that later. Another time, not today. I'm messing around in the futures market. And this is like everything in the world that I follow, basically lots of the ETFs. Got some, this was when, from the, I think I made this one for the brother, Complex Design on Brain Trust. Got a lot of cannabis stuff.
Yeah.
So I had to add one. Pharma plus pennies. This is the Matty Ghost list. So every time you bring up something, I'm gonna keep it in this list, because what happens is something will pop and then it might have to have a pullback. That pullback might take a month, might take 3 weeks. So a lot of times, by now you have to revisit things. And so it just works out better if you just keep them in a list, and then you can sort them out further. From this, I'm working on an organizational approach where I can sort. I'm an Elliott wave theory trader. I can kind of sort things based on where they are in their wave cycle. If they seem to be moving together, that way I can just go from. So when one section gets like overbought, that whole group will likely be, if they're moving together, if they're kind of in sync.
Yeah.
So you can make your own list about just once you get these technicals down, folks. Everybody listening, you can go to a site where you can find the biggest gainers of the week, and the month, and you can scout those for opportunity, because the fact that those are the biggest gainers, that's telling you that's where the money is. That's where the big money is pouring. And if you are a trader, we're talking trader logic here. We run toward the fire, whether that whether something is falling off the edge of the earth, we run over there and short it and get on it, or if it's rising to the moon, So we're ambulance chasers, and fire watchers, So that's what we do. We run toward it, because that's where the fast money is in either direction. And as a trader, you don't really care which way it goes. You just want to be on the right side of the trend. That's all. So starting from last week, you recall what the primary things were last week? Some of them might want to look at from last week.
XBIT.
Okay. So last week this was recommended?
Yeah.
Okay. Today is the 9th, so last week was the 2nd. Let me see where we were. May 2nd. Somewhere like this. Don't know what we said, but that's a big reversal sign, and we definitely were overbought. So we more than likely said we were going to have a pullback of some sort. Don't know, don't remember, but we see that this would be a common, typical area that we broke out from.
Right.
So it would be a common area that we would return to, and we did. All right. And this big candlestick here kind of suggests that we could be going further. Now, put some pause in it. I think what concerned me, I'm questioning where we are in this cycle. Are we going to get an ABC pattern, pull back even more? You know, that's what I'm concerned about. Let me come down on the lower time frames. You know, it could be, not, and could be. So it's like, it's one of those things that if you get in, as long as this trend is consistent, you're good with it. You know, you good. But if it starts coming back, I would be concerned that you might be looking at an A, B, and a C wave, and come a little further, basically retracing this whole structure from this low. Because you're talking about let's see, this was from $8 to $16. That's a 100% gain. That's a significant gain. And so, I mean, just in, you know, just peeking at it, I'm not trying to give away too much to you guys on YouTube. You know, you gotta join me on that Patreon to get the good game. But let me just say, I'm gonna be intentionally vague a little bit. But let me just say that just peeking at it from an Elliott wave theory perspective, it looks like it could be due for a retrace. You know, the issue with all of these, now that's looking at it from here, just from this section. Just from this section alone, it's suggesting that it could be coming back. Now, when we go out to, let's see, let me look at more data. When we look at more data, the question with this one is it continuing? Was this bottom? Is this run up a counter trend move in the context of a bigger downturn, meaning is it going to continue going down, or is it a reversal where we're going to continue going up? So you take it one step at a time. You may not, you trade it as far as you can see, as far as the data tells you in the near term. Okay. And so, and in the near term, we're still kind of overbought, and I would lean toward a retrace. So even when we were looking at it at this point, looking at this run of 100%, that alone says, you know, and for Elliott wave reasons, and this from this view alone, and looking at the state of the stochastic, this view alone suggests that we could have a retrace. Now, when you go out to higher time frames, is this an ABC? You know, are we going to retest this low? Because we are overbought, so it's hard to be bullish in this condition, in this state. Now, like I said before, again, all of this is for entertainment purposes. You know, if I was trying to be a vigilante and get in on it, you know, hey, and there's nothing wrong with that as long as you mitigate your risk. I would, any low below this current candlestick, let's say I'm on the 2-hour chart. If it went below this, I'm out. You know, I'm out. You know, I like to see it. I would now, an even more conservative approach would be to force it to make a higher high. Force it to make a higher high. You know. But if I really was insisting on, you know, hey, I really like this, I think it's going high, you have to build in safeguards say to yourself, what if I'm wrong? What would make me? You have to argue against yourself. Okay, you're always struggling for objectivity, you know, as a trader, and there really isn't any objectivity because we all have our bias. But you know, you recognize your bias, and you have to get to that point where you can argue against yourself, you know, and say, well, okay, what would have to happen to make me put my bullish position in doubt? For me, I would say making a lower low. That would be one, because we just talking. This is a 2-hour chart I jumped to, so we just talking. You know, 4 daggone candlesticks. So that would be 2, 4, 6, 8 hours. I mean, it should, if this run is real, it should be able to continue making, you know, higher lows and higher highs and take out this high if it's real. So if I was to buy this Monday, it would have to. I would run. I would run if I saw a lower low. That would spook me, because again, this thing is up 100% from here. That's in, you know, in here being since March of March 16th.
Yeah,
you know,
that's why I always try to get in early,
right?
So and not getting on the top end where it's either gonna go up or down. You know,
right. See, this was the good area right here. This was the area when, after this decline, when it started going sideways here, this was the area to go, okay, bam, you know. You see, you had this line right here where it was resistance here, broke through, support there, fell through, flirted with that area, came above it. This was your tell when it took off there. So we're kind of chasing now, and I don't like to chase. You know, I don't like to chase. You know, and so this kind of looks like it might be a 50% retrace or thereabout. I mean, I'll give y'all that much, but that's significant, you know, in terms of Elliott wave.
Yeah. And then we're looking at
a little
BC
bit between 50 and almost 62, which is also a significant area. So yeah, this is not a area where, now this doesn't mean that I'm right. I'm just saying that in terms of, like, you know, common rules of trading, entering in the trade right here, the probability, the statistics are not on my side, that, you know, that it's going higher, you know, from here, you know. Could be wrong, but I like buying at safer points, like, you know, before this thing took off. But this is where the training comes in, because the novices don't have the skill set to know when something has been falling like this, even here, even before it start going sideways. They don't have the skill set to know when they need to start, when this is getting pretty to them. You know, your training tells you, hey, okay, I need to start looking at this right here. You know, so you're watching, and then you see other things that make you go, okay, I'm pulling the trigger. You know, but see, the untrained person will see this, and now they like it. And so that's why the untrained person is the lack. They always enter. It's like they say it's rigged, because they go, as soon as I buy, the price goes down. But that's because you don't have any training, and the game is set up to take your money. You know, what's up, Ty City? What's up? If I'm everybody in the chat, I will turn to that later. I get in my zone with these charts, and I don't peek over there like I should. And I'm learning from y'all, the way y'all run y'all channels. Y'all can do stuff and follow the chat. I ain't there yet. You know, you be patient with me. You know, but I appreciate it. You know, Tri City. Yeah, I'll be on those other spaces around various channels on the overnight in the manosphere. You know, I ain't dealing with this 1.0, 2.0, 3.0. Okay, it's one space to me. All right, because I'm all over these streets. You know,
right.
Let's see. So yeah. So for me, this one is in a holding zone. But last week though, from what we saw last week, just to keep it in perspective, let's see, this date was the 7th and this was the 5th. I'm trying to see, what was it? Yeah, I have to remember. Yeah, I think I said last week we were overbought.
Yeah.
So what was another one from last week?
BCRX.
BCRX.
Yeah.
And these are, of course, all pharmaceuticals, basically, right? These first two we discussed were pharmaceuticals.
Yeah. COVID.
Yeah, you go. So I was trying not to say that word. Yeah, you got it.
Well,
yeah. No, you can say it. You okay. Yeah, but here, see this one. And we talked about this last week. Good call.
Yeah.
I wonder what we said. One, it made this higher high, which is, that's a good thing. It's a very good thing. In the sense that this thing had been going, this is a 2-hour chart I'm looking at. And this is from May 28th last year. Okay. So we went, took back like a year of loss in this run. So we haven't seen these prices since more than last year. And we're in this gap area where the price fell in May 16th of 2019. It fell from $7 down to here $4. And a lot of times these prices have a tendency to fill the gap. Okay. And it's already in that gap area here. So it could run up to here. Okay. And that would be nice from $4.70 today. Now, last week, where was it? It was here. It was here last week, around $3. I think I'm remembering this. I think we did I think we were expecting this to make a higher high. Let me see what this. Okay, nice. That's some serious enthusiasm right there. None of these other, these are pretty hefty. This is probably the biggest candlestick in the whole run. Nice volume.
I know it's good. Well,
now I think we got a pullback coming, but it's going to be minor. I don't think it's going to stop this trend.
Okay.
Yeah. So this is one of those where it depends on what your plan is in terms of how long you trying to hold it. Now, this is one of those, I think, good news, bad news kind of things. Let me look at a higher time frame if this is the one I think. Yeah. Okay. We have this descending triangle. This high was here. It was this 2000. Okay. The problem with descending triangles is that they normally don't hold. They break to the downside. But that's the bad news. The good news is we're in an upswing right now. That the fact that this triangle may not hold long term has nothing to do with the money it can make approaching this area of this resistance, or at least this big red candlestick retracing this, at a minimum, So we could get to this area, are likely to get to this area, even with some minor pullbacks along the way. We could get to this area. Now, just looking at it with my eagle eye view, I don't like this. I don't like this, all this action along this support. It's like if somebody was jumping on your damn ceiling. At some point, they're going to crash through your damn ceiling. They just can't just be jumping on your damn ceiling like that, okay? And so I don't like this. One, come on now. 1, 2, 3, 4, 5. How many times you gonna jump on my ceiling? So when this thing start going south, I wouldn't mess with it. Yeah, I couldn't. I can't deal with this. This thing been doing trading along this particular floor, jumping on the ceiling since 2002. So, but for now, the medium term, it's just a trade.
Yeah, I got my 2-day rule. I looked it up. It's 2 days, and so after 2 days, I can do whatever I need to do.
Yeah, I mean, technically, this is sexy because you got a low right here, got a higher low right here, and then anytime it took out this big nasty red candlestick, it got all that money back and made a higher high. So I mean, this trend is definitely bullish, as it approaches these target areas, especially this one, this target area and this trend line. So anywhere from this red candlestick to this line, this is where you get to the danger zone. It's a lot of money. We're talking about, we're talking from at least before this candlestick of this week, because this candlestick here is happened after our show last week. So we talked last week here in this red candlestick. Okay.
Yeah.
So we talking about from where we brought it up last week. We're looking at 100% gain. Between from last week to where trouble starts. In the neighborhood of 100% gain. So yeah, this is definitely in the near term, just as a trade, to get that fast money.
That's like what I'm looking at.
So again, this is just for entertainment purposes, everybody.
Right.
And most of this stuff, everybody knows my personal trading style. I'm a US dollar centric trader. I trade things that are that react strongest to the US dollar, either positively or negatively. So that puts me in the oil and energy and metal space, and the Forex market and the stock market, mostly trading ETFs. I like trading individual industries. I'm sorry, industries and not individual stocks. That's just my approach, because I don't care to do all that damn research about an individual company. Okay, because if the macroeconomics is going to favor a particular industry, I'm betting on the tide. The tide raises all boats. Okay, so I'm just betting on the tide. That's my personal style. I put my energy into being a better chart reader as opposed to becoming an expert on the balance sheet of a corporation. Or it's not.
I don't look at I don't look at the balance sheet either. I just look at the sector wherever it's hot at.
There you go. And there's some economic issues that's readily available to everybody, that makes sense to everybody about why that particular industry is growing, and that's good enough for me. I'm not saying the other method is wrong. I'm just saying that, hey, like they say, styles make fights. Okay, it's all takes all types to make a market. And look at this area. We had serious support here. Okay, so we broke through that. We came back up here with this big red one, and couldn't quite break through it. We fell below it, got a running start, and we crashing through it. This kind of makes the point I was making earlier, that you can't keep jumping on the roof, having somebody jump on your ceiling. You can't keep banging on the ceiling from the underside either without crashing through at some point.
Yeah, that's true.
Okay, so I like this bullish move up, but in the longer term, I ain't messing with this.
Yeah.
So this is just a trade. Okay.
Yeah.
So what else did we discuss last week that you think is worth of us revisiting?
BSGM.
BSGM. just right off the rip, which we see, made a higher high. Okay. So this thing, looking at a weekly chart. So we had this downturn here that started in 2015 of April, made the lower low here. The final low, let me just say, at least in that part of the trend, in mid-March. So we're approaching 2 months ago. And so the time it took to decline from, let's see, this would be June of 2019 to mid-March. It took all that time to lose all that money. And then just since mid-March, we got it all back and made a higher high. And so this is, tell me about this company.
Same sector.
Same sector.
Yeah.
The hell we're in, getting us out the hell we're in.
Yeah.
Okay, let me see. Kind of conflicted in the sense that it's had quite a run up on the weekly chart. It's kind of maybe overdone for a little bit. Let me see. Let me go around the different. This is the daily. See what is this? We got that little. This thing was in a triangle. It was in a triangle and it broke out. Get on my Patreon site, y'all, so I can talk, so I can speak freely. Let's see. Let me see the 4 hour. Yeah, this one kind of makes me want to pause a little bit. I still believe this thing is going higher.
Okay.
But it may come back a little. So again, this would be one of those where it depends on what your objective is, your style. So like a day trader would have a different entry and exit than say somebody, let's say, I'm gonna break it down to a long, medium, and short term. Short term would be like a day trader. Medium term trader would be somebody that would want to hold it for a couple of weeks. Okay.
Yeah.
And so longer term would be somebody who wants to hold on to it for say a couple of months, maybe up to a year, something like that. Kind of longer in that sense, like for the period of this crisis, okay, which we don't really have an end to, because I think we're in this thing isn't going anywhere. One, we don't have a quote cure. When we get the cure, if these companies are part of that, we got to go through an immunization cycle, and that's going to take time. So this thing ain't going nowhere. So these stocks that have people's attention, that's like we're getting verification in the price chart by making these higher highs, okay, and these big volume spikes down here. That money is in the room. Money has entered the situation. So this thing is going to be going on. So these price entries and price exit, it really has a lot to do with what type of trader you are, So I could see this. A part of me would say pause and see what happens. Just as for entertainment purposes, pause and see what happens. If it can get this high, and it looks like it wants to have a minor pullback. We might get a little pullback, But whether we get a minor pullback or not, we clearly getting here before anything really significant happens. We're at $9 now, and to get into this $15 level, that's like more than a 50% gain. So whether we have a minor pullback, which the significance of that is you might end up with a better price point to go attack this $15 level. And I'm not saying the $15 level is the end. I'm saying that's like the next real resistance, is at that level. But So where someone would enter would be based on their style. Like a long-term person is going to hold this for months. They probably wouldn't even care. The fact that it's going to go from that it might fall from $9 to $7 or whatever. They might not even care.
Mm.
But me, I do. I don't want to get that back. Yeah, this is a nice little run from what is this low? From $2.36 up to this high of $10. I mean, that's not quite 500%, but that's a hefty run, and it may not make a higher high right here in this little run. This little run might not be able to continue this thrust, so we might get a little pullback to this area.
Yeah, I see the support.
Yeah, we might. So I would put this in watch mode in the short term, but that watch is just for me waiting to get hopefully a better price. That's not doubt that about the strength of this trend. I'm not doubting the strength of this trend. I'm just doubting if this is a good price. Like if Monday's going to be a good price. That's the only thing. So yeah, all these things that we're looking at today, a lot of I'm going to say that these are especially risky because they don't have a lot of price data, and I'm applying technical analysis to something that doesn't have a lot of price data. Okay, that's extreme. That's not advisable, but hey, I'm showing you it could still work. Okay, but I'm definitely telling you that the odds that the risk factors are greater because you just don't have the data history. And technical analysis is about comparing present price action with the past. Comparing a stock really against itself, and it's trading the way it has traded in the past. But with such a small data sample, it's going to bring more risk. Okay, because you just don't have the past to compare it to. It's 2 years, 2 or 3 years, which is nothing. So what else? What else we got from? Did that cover last week?
Yeah, those are the ones I was interested in.
Okay. So what are we talking about this week? What's new? What new do you have for us?
I got HTXB.
Okay. Never heard of that one. HTXB. I'm gonna have to add that to my. Let me add it. You said HTXB?
Yeah.
HTXB.
I think, or is it? Let me look my list.
Let me try on bar charts too. Sometimes it's not on one site. HTXB.
Oh, it's HTBX. I'm sorry. HTBX. I just looked at the chart. I don't really care about the. It's in the same space, but I don't think they're doing.
So you don't. So yeah. We're not doing no deep fundamental research. We just purely looking. Look, this could be a bag of turd. Okay, it really could be. But if that turd price moves for the next 5 days, or we could be on it. But y'all know me. I like ETF. So this is really entertainment purposes for me. On my Patreon, my point is to teach the universal application of technical analysis, irrespective of what you trade, what market you're in, your style of trading. My point is to take people from what they're interested in and show them how this tool can help them be better at trading it. Okay, so Matty was known on these streets as the penny guy, and I saw him on other shows, and we met in the chat, and we'd be chopping it up, just like distracting the host of shows, talking all this stock stuff in the chat. So that's how I met this brother. And then there's some others around the manosphere I met that are trading cryptocurrency, and so it's people trade a little bit of everything in the group. And so, you know, I thought, because you guys hear me talking the chart on different things, that's not necessarily an endorsement, because I'm telling you right now, I buy industries. Okay, but that's, you know, but all styles work, and I'm showing here that you know, this stuff can work no matter what your style is. HTBX. Yeah, we got the dad going. We got the stock traders want to trade penny stocks. You got some of the penny stock folks who wanting to now experiment with the Forex.
Yeah, that's me. That's me. I hadn't got into it yet, but I'm getting close.
Yeah, it's just like, you see, it's just money to be made everywhere. It's just, and so you're like, you get bored, and that's another thing I'm trying to, you know, get everybody to kind of fight that. I'm trying to on one level, I'm like, yeah, Matty, go ahead and experiment, and that's you know, understand the macroeconomics better by trading, looking at things from that perspective of the Forex market, because that really will give you a better view of what's going on in the macro from trading Forex. You'll just see a lot of other things that correlate from those currencies, and it'll just help you in that way. But he's killing it in this penny space. Okay, so he definitely has found something that he's extremely good at. Okay, so it would be a shame, you know, to you could go to another space and not have the same success that you having over here, and to waste a whole lot of time just to come back to what you were doing. So, you know, stay with the pennies and, you know, experiment, you know, do the Forex thing, but don't leave this, man.
I'm not gonna leave. I'm just gonna experiment with you know, $100, $200. That's nothing. I can, if I lose it, I lose it.
Right.
Then I have to go back to square one. But I'm always have this to the side.
Right. I tell you what I like this gap. Not only okay, so we got a bottom here, and my mind is trying to see what this
because I was thinking that it could be a possible a bullish pennant formation.
Yeah, and look at this. It gapped right over the trend line. Gapped right over it. And it doesn't want to go below that price. Now the problem is it's looking like it's one of them damn descending triangles again. It's gonna just keep jumping on the roof. All right. So I'd have to, I tell you what, this is one where it'd have to prove it to me. Let me go down to another. Okay, all right. Context. Am I buying the story? Let me see. What's my opinion about the overall trend? Do I think this thing is going higher? Yes, I think it's going higher. The question I'm addressing is, what's a price entry for this? That's the thing. That's the question. That's the question. I'm just trying to get a sense how long this thing been falling. This thing has been, good Lord. See, this could be a box of turds. It really could. Okay, $47 back in January 2016. $47 down to a low of 19 cents. $47 to 19 cents. When people are telling you to buy those stocks on the stock market because they're cheap, I want you to remember this. This thing was $47 and it went down to 19 cents. I'm sure somebody thought it was cheap all the way down. Cheap got cheaper. Cheap just got cheaper all the way down to 19 cents. So, and we got a gap right here. So my thing, let me look at the four. My thing is this gap could fill. That's really the short of what I'm saying. This price could fall down and fill this gap. Meaning, if this candlestick, the high here was 35 cents. This thing could fall from 51 cents down to 35 cents. It could fill that gap. It could. Let me look at.
So it's gonna be like a to be announced.
Yeah, let me look around.
Watch that weekly.
Now to cut my, let's see, look at this. It's trying to give it up. Yeah, this would have to, I am now on a 5-minute chart. This one would have to prove it. I'm gonna put this here so this line will stay here the next time I bring this chart up. This one got to prove it. It's got yeah. I need to see it start making some real higher highs, like attack this, break this trend line, attack this, start reversing this downtrend, okay? So we got this low here from the 8th, which was yesterday. This was the low yesterday. Stay above that and go above this. Let's, win. Get a win. The price got to get a win. Get a I'll believe it. I'll begin to believe. Get a win.
So you saying this guy closed like about 55 plus on one day?
You know what? I would like. Okay, let me see. This high right here was from the 7th, and this low. You know what? No, get this. Take out this. Okay, from the 7th, this was the high. Okay, it had made a nice run here, which popped above these levels, and then it just gave it up. Then it just gave it up. It went from
looks like a bear.
See, it went from 56 down to this 51. See, I ain't into the hopeism. Give me enough. Exceed this high before exceeding this low. Then I can get into it.
Yeah, it looks like a bearish pennant. The ways the triangles, the wedge.
Yeah, we will see. We will see. I think that when it fills the gap, once it fills that gap, it could end up a whole nother shape.
Yeah, if it does that, I won't be looking at it.
Right.
But I'm gonna watch it.
Yeah. So I would say, I got this resistance here. Let me you just put some trend lines on it.
Okay.
There's no that's the same line. That line I drew is the same as that. Okay.
Right.
It's got to start winning. Give me some victories, give me some W's. This thing taking L's. It's just taking L's, No, this ain't FOMOing. I ain't for that FOMOing. All right. I'm for that,
Oh, I love FOMO, man. If it's the right one.
Nah,
in the right direction.
I'm
in the right direction.
Look at this. You got this price action right here. You got this gap up there. It's likely gonna come down here. We'll see. I tell you, but if it starts getting victories, then I can change my mind. This thing used to be $47. It's down here at the 50 cent area. What's the rush?
Yeah, but you know what? When I was looking at it, because I was looking at the wedges, I thought it was kind of bearish myself. I wasn't quite sure.
I'm with you. Your instincts were right. your instincts was right. So yeah, I don't know about this one.
I get to talk shit to some dude. Then there's a dude on iHub that was saying that this is a bullish. I'm gonna go in on him.
Well, no, don't do that. I mean, look, we could be wrong. I'm just saying, prove it. I mean, my point is this: don't listen.
I always talk shit though, Dollar Will. on the boards, they don't know who you are. So, and then you got people that short and whatnot. So,
yeah, that sounds like the manager's. Okay, I got it. Well, there's a common saying in trading: there's no such thing as a triple bottom. Okay, so this thing already been in this area at least twice, and if I want to count that, I can't buy it, man. This thing, I feel better about the argument that we fill this gap. Okay,
if it goes to the gap, it's over. That. It goes to the gap, it's over.
Oh, yeah, so you saying I'm saying that it could fall through the gap and land right here and stop. Yeah. And it might, it could be we could be on to something there. Okay.
Yeah.
In that area.
Okay.
But even then, at some point, it's got to start getting some victories. It's got to start making some higher highs and breaking these trend lines that we got up here. So I'm saying it's more likely to come down here, fill this gap before it breaks any of these trend lines.
If it hits that gap, I won't be looking at it because it doesn't have a lot of volume, and they need to have some kind of promo or something to get some hype in it.
Yeah, I don't think I've ever bought a triple bottom.
I may have been on accident back in the day.
Yeah. I'll get it later. Yeah. So yeah, we'll watch this one. We'll just be joking on this one this week.
Yeah.
But it's got 35 cents. Okay, if you get around 35 cents and you get back to this area, this is $1.24. That's nice. That's a nice run.
Yeah.
That's a nice run. So let's see. So $1.75 would be from 35 cents. $1.75, would that be 500%? I think so. Something like that. So we talking not 400%, something like 300%. And then they put about 300%. That's let's say, I'm just saying, worst case scenario, if we start rising from this point, if we start rising from this 35 cent area and we're in an uptrend, well, the next higher point would be here. So we would clearly make at least 300% or about 300% just in reaching this area. Even if it fails to make a higher high, but it gets close, that's a lot of money from 35 cents up to that. Even if it fails, it gets there.
I have to look at the volume and make sure it's not going sideways. I have to be certain. I have to be certain on that, because sometimes these things stay dead for months.
Look at this. Even if I took out this, let's ignore this red. This volume is going down too. So the market ain't really showing no love for it. The price is going down. Except for, I'm gonna ignore that part. This volume is trending down. There's no sign of life. Patient is receding fast, So I don't know. I'm not trying to be no cap.
Yeah.
Trying to be no cap.
Okay.
No cap. No. So what we got? What else? What's the other one for today? So this one is we're gonna have to watch this one, but this one's on the watch list. We gotta check it every day, because the thing about it, when prices fall through gaps, I mean they fall like a knife. So this thing can like
falling.
piss along till it get to this level and then just fall, just like in one day. It could do all of that.
Yeah.
So don't think that because it's far away that it's gonna take a long time to get there. Not necessarily. Not
Right.
necessarily. You know. So what else we got for today?
Thanks. I got that motorcycle. I'm on the deck right now, so I guess everybody's.
Oh yeah, I heard that, man. We jealous. Is he popping wheelies?
Nah, he ain't popping willies.
Oh, you sucker.
He want to be seen though.
Hey man, it's peacocking season. You can't
Yeah,
peacock behind keyboards and social
yeah, that's true.
distancing.
That's true.
I think we're gonna have a baby boom, man, after this. What you think?
Yeah, I think so. Just be prepared to, be able to provide that maternal care.
That's right. That's right.
Maternal and paternal.
Yeah, I don't think nobody gonna need no game. It's like it's like any story or do. Sister's gonna be like, yeah, that'll work. That's good enough.
Yeah, yeah. Oh shoot, you dropped your mask. That's it.
Right, right, right. Any line will do. Just make just enough to offer plausible deniability. Just come on, make an argument, brother. Make an argument.
Yeah.
But what else we got?
LPCN. I was thinking this was gonna be bearish too.
Okay, this one's in the list. Okay, what's this called? Lipocene?
Yeah, I think so.
LPCN. Everybody listening, what's on my mind. Later tonight, I'm trying to put together a crypto show with a couple other people from the group that are a little more closely familiar with that sector. And then tomorrow, I'm gonna do something related, some kind of market update of some sort. See what's going on, what opportunities are available. Just get you guys ready for the week ahead. It's kind of keep up to date about the status of your retirement account. That's the main deal, man.
I got mine's in conservative, most conservative I could find.
But even those, when they say conservative, you gotta really you gotta dive in there and look at what it is invested in.
Yeah.
Learn what those words are. They use words like growth, and then income. Learn what that is. Growth is usually things like tech stocks that don't pay dividends. It's mostly the stuff that's falling. So personally, I would run from anything that said growth. I ain't messing with it.
I don't want growth.
And the ones that say income, that's more where you want to be, but you still want to look at the charts. And most of the time, the symbols you're invested in your mutual fund, they have a symbol. Okay, you can look and see what company manages your fund, and go to their website, and you can find the symbol. And you can look it up online, and you can chart it. You can apply technical analysis to it, and you can get a sense of if that fund that your retirement account is in, if you want to stay in it, or if you want to move to the sidelines. And what is it? That money market account is usually an option in your retirement account. So when I say move out, I don't mean withdraw your money. I mean, again, this is all entertainment purposes, okay? Talk to your financial advisor, but I'm just, throwing out some things that can help you as you begin to try to understand that gibberish that they write. They really should pass a law to make them write in plain language. They know, the government and the money managers know the level of awareness of American citizens. They know that, but yet they don't write it in a way like they know how little we know. they really can do a better job of communicating than they do. You know,
It's all about the dollars. They want to keep their jobs, so they want to seem relevant.
I agree. Okay, this here we have not made a higher high. Um, let me see. Let me go. Let me go to the. Let me go out first before I even start yapping. Let me look at the bigger.
Mm, red candlestick.
I think. Okay, so this has been declining since. It takes me this long to see, y'all. I'm trying to see the date. Okay. Oh man, I looking at the bottom of the chart. This says September 1st. That week was the weekly chart. The week of September 1st, 2016. 15. Okay. This thing's been falling for many, many years. Okay. Why did I put that there? I think that's the low. Yes, that's the low. Okay. Let me go to the daily. I think my question with this one is, are we going to retest this low?
Right.
Because that's 30 cents at the low, 74 cents. So that's more than 100% gain. And it's starting to look kind of toppy. You know, we are, severely overbought. So
Yeah.
it doesn't look like even if this is not the exact top in this run, it doesn't look like there's much left in the tank. So I would be inclined to wait for this thing to
Yeah.
pull back a little bit, because I think you can get this closer to 50 cents.
Yeah.
You know, you
That's
can
what I
get it
was
close.
thinking.
Yeah. That's what you were thinking too.
Yeah. When I was looking at it.
Yeah. So this would be another one that you have to, this is what your watch list is for. Emphasis on watch. You know, and a lot of times when I see this at the end of a run, that's a kind of a sign. It's kind of like exhaustion when you've had a big run and you get a big volume spike at the end. That's like the finale, you know,
Yeah.
the completion. Okay. You brothers use your imagination. The completion. It's all over. Okay. Withdrawal, lose interest. This is it. Smoking a joint. Okay. It's over. Leave.
Yeah.
You still here? You could, go on, girl. Go on, go. So this is a sign of that. When you see a volume spike, the biggest volume at the end of the trend and not the beginning, especially. So this is,
Right.
yeah. I don't like this. I don't like this. And we haven't had a higher high since this volume spike either. Okay. Ain't had nothing higher since that. So I think it did its thing. It made its high, or it didn't go higher than this. But but like I said, it could go and minimally go above this and die. But if I would get in this, I would want to be in it a while, you know, like if I got in it, 50 or 60 cents, I'd want to be in it trying to make at least, 50% or something. I'd be trying to
Yeah.
hang it into 90 cents, not buying right now at this price and then selling, because it
Yeah.
went up 10 cents. That's no. Now back to what I said earlier. A day trader, that might be their thing.
Yeah.
That might be their thing. So, but that's not my particular stuff. So I'm not putting it down. I'm not saying it's wrong. Let me just be clear. That's a stylistic thing, and I have my bias. Okay, I you know I I you know I want all the money. I want it all. I want it all. you know, I want the
Yeah.
big move. And Elliott waves terms, they're waves and they're subwaves. Subwaves are called fractals. I want the whole fractal, the whole move, because you're talking at least, 30% minimum. It's going to be more 30, 40, 50%. That's what I like. That's what I'm in it for.
Yeah.
So
Ty City wanted to go over Sears. I think that's the
you know what? Let me try to give Ty City the link.
yeah.
He can come. Let me check on this. See what's up with the chat fam for a second. See what's up, and let me see if I got my link right. Come on up and chop it up. What's up, Judge Zilla? What's happening? What's happening? Judge Zilla the Beast. Laro, what's good? I don't know how to pronounce this. Ori 666. What's up? I see we got some Iori. Seems like he got a little bit of technical skill there. There you go. Good to see other folks checking out the charts. Check out CR. Oh, check out Crackhead. He is smoking. Yeah, that's right, man. I'm sitting up there trying to figure out today gonna go Crackhead. Oh, okay. Ty City. Hey, okay, sure. What are these real symbols? The Ty City, did he get the link? Is he hopping on?
I don't know if he's still
I can see. That's right. Nope, he's not. But I don't even know if those are real symbols, but I'm gonna check them out.
yeah, those are real symbols. I know one of them is Sears. Sears filed for bankruptcy, so they got the Q on the end.
Okay, so what's up with Myrna or mRNA? Somebody asked about that.
Yeah,
So
Moderna.
We're gonna check it out. Let's look at it. All right. I haven't looked at that in a long time. You?
Yeah, I've been following. It's up to 59, so it broke through the 50s. I guess just because they got a lot of volume. They got a lot of people buying into it.
Man, this thing is rolling because we talked about this. Okay, I don't know if we talked about. Did we talk about this on YouTube? But I know you have brought this up to me, and we discussed it on Patreon a while back.
Yeah, we I think we did. I don't know. I think we just talked
Because I
about it
know
on Patreon.
when did you first buy this? Because you bought this a while back, right?
Yeah, I bought it. God, I think it was this maybe March or February. I bought it 2023 something, and I sold it when I got up to 50 something.
So this low was from June of last year. This thing is getting it.
Yeah, I took my profits.
So this is another one of those that's like, as a technical trader, it's just not enough data. So it's like, it's scary. And so we got the breakout point right here, and we way up here. This thing is due. This thing is due to come back. It really is due.
Yeah.
I would be looking for a way out if I was in this, looking for a way out. As long as this thing keeps making higher lows and higher highs, I'm in it. But the first time it defeats one of these candlesticks, I'm out. I'm out. So I go on me, but this is just for educational purposes only. I would be putting me a stop loss right below this candlestick. And then the next day, if it made another one, I'd move the stop loss again. Get me out. And I just let it keep riding and let it take me out. But as long as it's good, I'll be right there. So the most I would lose is 1 day's worth of performance if I just move my stop loss every day. Just every day, just go move it. So the new candlestick forms right here. I move my stop loss to the low. Every day, I just move it to the higher low. And so at some point, the market is gonna take me out, and that's fine. So I wouldn't even be trying to get the highest high. But if the thing is going to keep running, I'll just keep moving the stop loss and let it take me out. Now don't you technical traders write me. There's a more elegant way to do it about how to move the stop losses and all that. But for people that are more novice, that's the way I described it. That it's better than doing nothing. Okay. So the more elegant ways, you got to understand some other concepts. It gets to be a little more complicated. But everybody can see that this candlestick is, low is here, the next low is here, the next low. Everybody can see that. So, this is something everybody can do. You don't have to turn your head and watch the price go. You don't have to do that. You can move your stop loss and it'll just take you out. Somewhere near that point. But yeah, this run is a little too. I say congratulations for everybody that own this. If for those of us who don't own it, too bad. We'll catch the next one. $59. This is nice. And I mean, even this run from here. But this was a nice, easy point technically to get in. This low here at $19 back in March 13th, because you had this spike here, you had this retrace, and it made a higher low. This was an easy one, an easy entry. Okay, to be able to get in this around $20 and run it up to near 60. That's if we were looking. So yeah, I mean, even from here, I mean, Elliott wave theory says this is in, this is over, even just judging from this move. So nah, I'm not feeling this one staying in it much longer. I say pat yourself on the back if you own it, pop your collar. You done good, don't give it back.
Yeah.
What's happening, Ty City? Oh no, this is not Ty City. This is man, how am I supposed to say his name, man?
It's Iori, bro. How are you?
Iori, what's happening? What's happening? Yeah, I think I remember this emoji from DJ Kuda or one of those.
No, it was Art's channel. We were talking about
Art channel. That's right. Art in the song.
We were talking about IT and stocks and like all that kind of stuff.
Yeah. I wrote your name, brother, down because you have some some deep knowledge about this trading life and a little bit of and all that. Because what I'm trying to do is it's really kind of a mission around that I had around the time when I'm one of the co-founders of the Black Brain Trust.
Oh, okay, cool.
Okay, and so I knew that we had brothers with these skill sets. We like dispersed all around the manosphere,
Sure.
So I'm like, we need to pull this energy together, in some common places, so that we can all kind of benefit, So tell us a little bit about your experience in the trading game.
Well, I mean, I play big boards, so like when you guys were talking about penny stocks, I get it, but for me, the implied volatility of penny stocks are a little too much for me to deal with. So
can you get a little closer to your mic?
Sure. Let me just pull myself in. So right now, if can you guys hear me a little better?
Yeah, you a little distorted.
Okay.
Your preamp a little hard, but other than that, you good.
It's because I'm using a Logitech mic, so you're gonna have to forgive me on that. But I'm basically a big board tech investor, so the types of stuff that I'm in are like the semis, like what is it, Intel, AMD, like what's
the safe large cap stuff.
Yeah, the large cap stuffs, because the thing is there's less implied volatility in those, and for me, I judge a trade based on implied volatility. I'd much rather make $100 to $200 in a 10 to 15 second period in a market like this than dealing with like a low net worth stock that can just drop off the table. And for me, I judge a trade by what the possible negative can be. So, you know,
so yeah,
because you got to play off of track record too.
Right. See, there's a risk of these pennies. These are companies floating around bankruptcy.
Right.
And so if you, let's say you got a large sum of money and you want to do some trading, you know, even if you, let's say you got 50 grand, first of all, at a certain dollar amount, it's hard to invest that amount of money in penny stocks because you know, you just control too much of the float, too much of the stock. You know, when you have that large amount, and you don't want to even risk that large amount of money in a company that's like on the death watch.
Right. And the biggest thing with the types of stocks that I like to play is that there's plenty of liquidity to play around with. Sometimes what happens, I've seen this. I've never played penny stocks like this, but from the people that I know that play penny stocks, they tell me that volume is the greatest indicator of what your penny stock is doing. And sometimes if volume goes down, that thing can die. And then basically you're stuck in a position because it's a volume trap. Sometimes you can't even get out.
Oh yeah. That's why we try to make it clear, I need to be better at it. But we're very aware that it's a lot of pump and dump and scams in the penny stock area. People promoting that you should buy it, and so the people promoting it, they're the ones. When he talks about the volume, that's like the number of trades, you know, amount of trading activity in a day. And when you have a small amount of trading activity, like in the penny stock arena, a small number of people chatting on a bulletin board, they can manipulate the price. Well, let me rephrase that. They manipulate the price. Not that they can, but they do.
The message boards are the ones that are pumping it. You know, you go on, for example, like Yahoo Finance message boards. By the way, nobody should ever go on Yahoo Finance message boards to create a trading plan. But the thing is, I was in the pot stock deal in 2018 or 17. Basically, you know, when Kron was a $30 stock, Kron is a $6 stock now. And basically, you know, people on those message boards were saying, oh, this is the next big thing, blah, 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 blah. And, you know, I was just like, there's no track record here. Right. But the thing is, you'd see those stocks just gap up off of pure hype. And, you know, I'm not going to say I didn't play them a couple times. I basically got 15 cents on the positive out of a 10-minute trade, really. But, you know, for me, the thing about those stocks were I was scared in the trade more than I was comfortable. Even though I played it twice and I made, you know, I think it was $300 and $500 both times I played it. The problem was that I had 3,000 shares and I was scared. So even though it ended up okay, even though it ended up bouncing and stuff like that, when you got like 4,000 shares in a trade and you don't necessarily believe that the price action can hold as much as you're used to holding on the bigger board stocks, that's an adjustment. That's a mental adjustment that you have to deal with.
No doubt. You know, again, like I said, in my group, we got people trading all styles, and my goal is just to show them that they can use technical analysis to help mitigate that risk. But yeah, we talk very openly about that the fact those penny stocks, it's a lot of, you know, I guess you would say, as people say, scams. It really is. Sure. But you can, but the technicals, knowledge of the technicals moves that the risk more in your favor, because it's really there's a saying of smart money versus dumb money, and you really see that in the penny space.
Right. right.
That's where the dumb money really they pay it, as I call the stupid tax.
Right, right. Well, the other thing is I'm looking at all these moves. I'm looking at RSI and all these kinds of things. The RSI
Mhm.
on a lot of these stocks
Relative
are,
strength index, everybody. Relative strength
yeah,
index.
relative strength index. It basically measures the efficacy of a trend, right? Uh, the RSI on the market in general, on a lot of these stocks, even in my stocks, they're like they're in the 80s.
Mm.
They're in the 80s, and that's, and to be honest, the reason that I can't necessarily be long on this stock in terms, or in terms of this market, in terms of a swing, because in order for you to be long on a swing, you've got to understand that the volatility index is low in terms of RSI. I like getting in around a 40 to a 50 and getting out around a 70. Okay.
Yeah, which you got any stock in particular that's on your mind?
No, no. I mean, I'm just saying. Normally, when I get into normally when I used to get into um, swing trades, those are the metrics that I would use. So, looking at the metrics now on some of these trades, a lot of them are almost overheated to me. If you look at, all right, so something I was looking at. Let's see here.
I got a chart up of I'm gonna bring up AMD just to show the RSI as you were talking about it.
I'm out of AMD, by the way. I got out of AMD at 53, like 2 days ago.
But I tell you what, if that's the case, that doesn't say a whole lot for the damn semiconductors, because AMD was like a leader of that camp. That's one of the ones, and we see it.
Right. I mean, the three leaders of the semi space are, to me, AMD, Intel, and you could almost say that that Micron's kind of a play on the memory, but to me, in terms of the CPU space, which I kind of follow a little bit, it's AMD and Intel. Those are the kind of blue chips of the space.
You know what's amazing? Intel. If you look at Intel inside, ding ding ding. All right, the Intel. It looks like the S&P 500. Everybody keep this chart image in mind. I'm gonna bring up the S&P 500. It looks okay. So this correlation is pretty strong between Intel and the entire S&P 500, and they both technically look like they do to head south.
Mm-hmm. Yep. That's right. Because it's too heavy. Like for me, it's too heavy, especially understanding the fundamental data that we got on Friday. So I'm kind of.
So what is it? What is it that what is the now well, we're technicals on this camp, but we still like to know the point at which the fundamentals catch up the price, because in the beginning, before the market started falling, sure, I used to have to get into all these debates about
sure,
what the technicals were forecasting, but sure, there's no more debate right now. Okay, so now I want to know from someone that watches the fundamentals, what's the most ominous bit of data you've heard fundamentally?
For me, like, okay, so I've been following the whole thing from a fundamental and a technical side. Like, because I look at technicals, but at the same time, I always pay attention to fundamentals, because fundamentals are kind of the barometer that makes the technicals kind of.
Oh, so you're a dangerous brother. You know a little bit of both.
So like, as far as I'm concerned, and I was talking to Benzo about this, Benzo Beasley, before you got on, Doug. On the other stream, to be honest, this market to me is trading on hype, and it's also trading on a cure for COVID. Because and I started figuring this out when I started looking at Gilead, and there was that drug remdesivir that that had clinical trials in China. It kind of fizzled out, and the moment that came out, I remember the market going up from 100 on the NASDAQ to basically going down to 30. And for a short period of time, it went into the red. And then the day that the Chicago trial came out, which was the United States trial, that was one of the things that spurred the market higher. So to me, this market is praying for a COVID solution, whether it be a vaccination solution where you've got Moderna and all these other things that are leading that, or whether it's a generic drug solution that can be repurposed. And that's what Gilead's looking at. So on that side, that's one of the fundamental tailwinds. The other thing is a lot of traders don't see value in this market considering where we came from.
Right.
Right. Because I'm always somebody who says that a market doesn't go up in a straight line, right? A market goes up, goes to the side a little bit, consolidates, and then goes up. So for me to see this market just rip upwards with no retracement is something that I'm not buying, and I don't see that as being a long-term trend. So I've got money on the side.
Well, especially when you get news reports that the government is basically financing it.
Sure. So like I've got money on the side, except for my long cash positions. The rest of my money's on the side. Some of these deals I've bought at lower rates. I bought at like 16, 17, 18. And so I can afford to be long on those because they're $22 plays. But then again, I've got stop losses if they hit 20, so I got my profit guaranteed. But everything else I've got in cash, and I'm waiting for a pullback.
Yeah, I think we need to be mindful of the soft pitch the government just gave everybody.
Yeah, of course.
Dug your retirement account out the damn trash heap, made the market retrace 50% from that low. And if you don't take that and go sit your ass down, you some kind of special stupid.
Right.
Okay? Right. I mean to hurt your feelings, okay? I'm trying to get your attention. They can't tell you no clearer. You got to read between the lines. This was a warning, a second chance for all of the people who didn't get out to get out. Now Warren Buffett even is like, he ain't, he's sitting up on TV looking like a man in pain. He wants to sell, but nobody wants what he's selling.
Right. And to be honest, bro, I look at like all these sectors, like I'm a crackhead when it comes to this stuff. Like if we're looking at all these sectors, I'm looking at airlines, reading all the news reports, listening to all the conference calls. Like that's what I do. But the thing is, like, it's weird for me to think about something. I was listening to JetBlue's. I was listening to JetBlue's.
You listen to the conference call?
Conference call.
Oh, you deep in it. Well, hold on. Explain the conference call to everybody who what that is.
A conference call or an earnings call is a snapshot for the previous quarter. And basically this was the quarter for, what was it? The quarter ending in March.
Right.
So
And this happens every 3 months. The
every
CEO or somebody from the company, they come in and explain to you the balance sheet.
every 3 months, there's like an earnings call and stuff like that. Okay. And by the way, I listen to Uber's conference call. I listen to like all the. So I've got like watch lists for the big movers, and this is kind of how I do my thing. So I've got watch lists for the big movers on a daily basis. And so what I do is after the reports come out that night, I listen to all the conference calls before I decide what I want to do. And I haven't taken a position in any of these. But I was looking in Uber, and I was looking at JetBlue because, they're transport stocks. And transport stocks and airlines, even though, they're considered different. I look at airlines as still being transports because they're moving. Uh, and I looked at those as barometers for the economy. I always do. And technically, JetBlue was saying, "Oh, well, things got way worse, but now things are starting to get better." And I looked at that as being false because nobody knows what airline demand is going to be like for the next 2 years. Any of these people that are telling you they know what airline demand is going to look like are full of shit.
See, that's why you got to remember that the CEO, his job is to.
Right, I get what he's saying.
No, I know you. I'm explaining it to the people listening. I know you know that you know very well. I'm just saying for the people listening, it's the CEO's job to put lipstick on a pig. Okay, he has to paint a rosy out future so that the current stockholders, who are the owners, the current owners, so their share value is protected. He can't say anything. He can't lie because that's against the law.
Right. Sure.
But he can come as close to that as possible, as his legal counsel will allow him, to give you something optimistic to hold on to.
Sure.
And your only protection against that kind of effery, in my point of view as a technical purist, is the price action on a chart.
Sure.
Okay. I didn't begin this journey as a technical trader. I started out on the fundamental side. And for my canaries in the coal mine was Weyerhaeuser and Federal Express.
Okay.
Because everything you buy comes in a cardboard box or at the international paper, right? As you follow that one too,
Sure.
Cardboard box or some paper. And so when the economy is slowing down, that's less stuff being ordered. Well, that's going to show up in less cardboard box and paper usage.
Right.
And then I would look at that and look at the load, the freight load of Federal Express. Okay. And so, and I saw that they would correlate that Federal Express in their earnings call, they would show that their freight load had dropped, and international paper or Weyerhaeuser would say that they have gotten fewer cardboard box orders. That was before I became a technical trader, but
sure.
So yeah, I'm with you on that, man.
Sure. Yeah, I mean, so like when you see stuff, and Uber basically said that see, for me, I don't listen to what these people say on their conference call because I understand their sales, right? They've got to turn right now a shitty bit of data into something that's salvageable. They've got to salvage it. So, I listened to Uber's I listened to Uber's conference call, and Dara, who's the CEO of Uber, Dara Khosrowshahi, he basically said the same thing that the airlines did. He's like, "Oh, well, we bottomed in April, but now we're starting to see good trends going into May, June, and whatever." Right? And I'm like, I'm not really seeing it like that. But but the thing is, here's the thing with the market. The moment he said that, the stock spiked. Now their financials look terrible. Their financials look terrible. It was bad. The financials in terms of earnings per share and revenue were bad. But to me, I can't invest in companies like that where the technicals might look good for a 24-hour period looking at Friday, but the financials are so bad that I'm like, look, there's plenty of companies who have good financials and decent technicals that I'm waiting for on a pullback because this thing is too hot. And it's better for me to get in to AMD in the high to mid 40s than chase it in the 50s.
Yeah. Let me handle a couple of shout outs, and then I'm go through some charts and shut it down. So while I'm shouting out some folks, Matty, can you help me out and kind of go through the chat and write down some of the stocks that people have asked for? What's up, brother?
Yeah,
The tech.
yeah, let me pull it up real quick.
Yeah, I'm here. Just kind of write it down while I'm shouting out some folks. Keep it techie.
Okay.
Yeah, that brother he kicks it about Linux. Y'all need to check his channel out. Give you some programming game. How to get around in that software for a lot of us that got these dead computers. Got some you folks running around there with them 2012 Macintosh with Apple not even going to support it anymore. You might want to try to put some Linux on there or something. Put some Ubuntu. Get with it. Holler, brother, keep it techie. See if you can revive that $3,000 investment. Apple, Apple's really kind of pissed that we still. My laptop I'm on is 2013. They hate that, man. They're too good for their own good. They got 9-year-old computers is still working. This will be my second. Let's see. I had a 2004 model that was the Motorola chip. The computer worked great. The only thing that killed it was when they moved from Motorola chip to Intel. So yeah, y'all get hip to Keep It Techie channel. Rael, what's up, brother? Brother Art New Stall, yeah, what's happening? Y'all will probably see me there tonight. I usually make it through there, and then way in the wee hours, I'll check out DJ Cuda and those folks because I'm usually up waiting for the London market, checking out charts.
For sure. Yeah, bro. Like, see, and that's why I'm here, because what you just said, bro, like that's what I do. So, like, for example, let me kind of just boil this down. It's number one, it's great to talk to you because this is what everybody should be doing, right? Like, for example, yesterday I was up since 4 a.m. and I went to sleep at like 1:30, like right after close. Reason I was up at 4:30 in the morning is because that's when pre-trading. That's when I was comfortable waking up for pre-trading, and just kind of reading news and all this other kind of stuff. But 4:30 in the morning, 1 o'clock the market closes. Then 3:30 I'm looking at Nasdaq futures. Then 6:30 I'm looking at China Open. Then what is it? 11 o'clock, you've got Europe opening. 1 o'clock, you've got London Open. And then you've got pre-trading from 1 to 5 in the United States, and 6:30. You've got everything else.
Yeah, that's the move. That's
everything.
Go ahead.
That's everything, bro. Just like you. Just like you.
Oh yeah. Yeah, see, I know what's got to get them is they got to get started. Okay, that's the first thing. Get started. So it's a little mountain to climb to learn the basics, and then you start paper trading, and then you start having some success, and you put that figure in your mind. The key figure to put in your mind is how much am I getting paid per day during the job I'm doing right now? Okay,
right.
You have a value. You have a price. You've sold yourself for a price. It is your daily wage. Okay, so get to know that number because that's your sellout price. All right, that's the price of your freedom. If you can replace that price right there, you can walk and be free. All right. So now in the paper trading environment, your goal is to find a strategy that you can repeat at a high success rate to replace that. I would say try to double or triple that amount. Okay, so that you could so when you fall short of it occasionally, you'll still be good. But you will learn enough in the beginning that you'll actually start to accomplish that goal. And I'll say, don't quit your job. Do that for a good year or so, and then revisit the question. Okay, but I think once people have some success and they see that it doesn't take like 8 hours of their day away, and they go, oh, this is yeah. Then you'll be up late at night
when you make $150 in a 20-second period, like you start realizing that, look, man, there's money here.
Right.
And to be honest, this is something I'll tell people. As a beginner trader, this is like years ago. This was in the Obama administration, because I started trading, and I'll be 100% transparent. I started trading with $3,000 of my own money, and I started trading because Netflix went in a 7-to-1 split. So it went from $700 per share to $100 per share, and I ran to TD Ameritrade and jumped into Netflix. That was my first trade. I think it was in the second term of the Obama administration, so probably 2013, 2014, something like that.
Yeah, but what did we do after that? Because a share.
I was up $15 per share in about 10 days. So
okay, gotcha.
After that, I was hooked. But
let me clarify this for people listening. A stock split does not increase in and of itself. It doesn't increase. You don't make no money off of it directly.
No.
Okay. No. People sometimes rush to buy it after the split, thinking that it means something. So you might get a little artificial, run because of that.
Right.
Yeah.
Right. But for me, the reason I like Netflix is because it was a play on new media and cord cutting. And I knew about Netflix since 2008, because remember, I'm in the tech space. So I was talking to techies that were my cousins, my uncles, and basically like asking them, I'm like, what do you guys think about this Netflix deal? And they're Silicon Valley guys, so they're like, yeah, it's something to think about. And then when I was in college, I saw it spiking, and that's when I started getting into technicals and everything. I'm like, everybody needs to get into Netflix right now. The growth rate's good, and the technicals are saying that it's gonna keep going higher. So I knew about Netflix since it was $300 before the split. So when it hit $700 and kind of went to 100, I was like, well, this is as good of an opportunity as any to get in. So that's what I did.
Yeah, no, I haven't bought anything technical. This is before I became like a ETF or industry-based purist. I think the last purely technical stock I bought was what's it called? Synchronous. It's a company that makes the screens for cell phones. I have to say it generally like that because they used to have a contract making all of the cell phone screens. And so that was like a cell phone play. And this was when this might have been 5 or 6 years ago. Cell phones was really, really taking off. They hadn't really penetrated the market to the degree that they have now. And this one company was considered like the pure play for cell phones, because that's really, they had one product, one business activity, And so as long as cell phones were selling, this thing was going through the roof. But whenever, say, Apple or any of those companies with the cell phone industry had a pullback, that thing would just fall in the toilet, you know, because they were not diversified at all. So it was like a perfect trade for
it set the swing right up.
Yeah, you put Apple up and you put that company up, overlay them over, and you can just trade it. So whenever it was time to buy Apple, it was time to buy that.
Sure.
But it went up a whole lot more than Apple.
Sure.
It was
so
like that was years ago.
The last kind of thing that I want to say is, for anybody that's really getting into the market, like Dollar Will was saying, you know how much money you want to make, right? But the thing is, what I always do is I always have, like, if I'm in 100 shares in a stock, technically I want to make $100 or I want to lose $100. So I've got a stop loss on the downside, and I've got a stop loss on the upside that I monitor, and then you've got a one cancels other order that kind of puts them together.
Right. So you've defined your profit and your losses.
Yeah, because
you know the best case outcome and the worst case outcome.
Yeah. And the thing is, like, the reason is because if you sit inside of a sector, you sit inside of a stock in that sector and study it, you'll know, like, okay, for example, Twitter was one of the plays that I was jumping into and jumping out of. Twitter usually goes up on a good day anywhere from 75 cents to $1. So I know what the upside is, you know. And technically, when it goes down, it goes close to that. It probably goes down $1.20, you know, because on the downside, you're always going to lose more money because of downward pressure. So I knew what my range was in terms of upside and downside. So when you know that, you can actually figure things out a little bit better on a daily basis.
Let me jump on these charts. Check Ty City. I looked up that AODB and I'm not getting no symbol for that on two different sites. So maybe check that symbol. And what do you got, Matty? What's the give me one.
Oh,
what's the Sears? Let's get Ty City Sears. You got that on your list? What is that?
Yeah, it's the SHLDQ.
SHLDQ.
Yeah, if they filed for bankruptcy, so they got the Q on the end.
Let me take a look at that too from here.
I'm sorry. Did you say something?
No. I said I was going to take a look at that from my browser too. So
okay.
Just not following along with you guys.
Yeah, this is let me go out to the biggest time frame I got.
Oh, Sears.
Sears, yeah, Sears. Sears and Roebuck. This was like the heart of America, boy.
Oh my God!
This is just one of those iconic brands. When I bought my first home in the mid '90s, man, I mean, it was me and Sears, man. I knew where I was going to get my washing machine. I knew where I was going to get my vacuum cleaner. I wanted Kenmore products. Okay, I wanted that Sears warranty. You know. I mean, Sears, the products were incredibly good. The service was incredibly good. They had a Sears nearby. You could go get your tires. Sears was it, man.
Yeah.
But then came Walmart.
Yep. And Target.
Yeah, man. Sears had it all. Back in the day, you could even buy a house. A Craftsman's house. Oh yeah, the Craftsman tool. Don't forget that.
Yeah.
It came with the house, man. You gotta have the Craftsman tool.
Yeah.
This is let me get this. Man.
Oh boy, that's bearish engulfing.
You know what? This is just enough in the toilet that is getting my attention. I think I'm gonna have to. Thanks, Todd City. I'm gonna have to watch this one a little bit. I'm okay right here, and we hit a low of 12 cents. And let me see how.
Let's see.
I mean, this thing is really. It's just been. It's like all the hell been beat out of this thing.
This thing's got annihilated. I'm looking at the chart myself.
I mean.
You gotta love the turds, man. You gotta love it.
Yeah, man. This look one thing we know it's got going for them. They got a brand name that's still strong, man. Okay. I mean, Eddie Lampert, he just got this was a bad move. I remember when he went and bought into Sears, and it just didn't work out. He couldn't save it.
Nah.
Okay.
They weren't
But look at this. Look at this. Look at this. Okay, I'm gonna have to wait until I gotta see it get a push. I want to see it come back down and prove itself. Okay, I want to see a push. In technical terms, I want to see it become overbought, go back to oversold, and it's got to confirm for me that this is the low. It may be. So I would say this is a candidate to go on the watch list, a high candidate to look on the watch list, because this thing, the low here is 12 cents. And it's been down to that level, I think, back here.
Okay.
Let me see. Let's see what this one say. And 12 cents. And back here means
1 month short.
18 October of 2018. So we're talking 2 years ago. So it hit the floor twice, and the floor was defined as 12 cents twice.
Right.
And that's huge. And it hit that floor 2 year. Let's see, this October would be 2 years. So let's say a year and a half. Let's just call it a year and a half. So in an 18-month period, it hit the floor twice. I would get into this now. I would take a chance to get into this right now, Monday morning, first thing, opening bell. I would get in this. Okay, this would be one. This one out, man. Yeah, I'm loving this one. Okay.
The only risk you have if they decide to do a reverse split. So you gotta look out for that. A lot of companies that do the bankruptcy, they do reverse splits.
Right. So they can sell some more, but probably more than likely they got to dig this price up, because at 12 cents, they can't get any. They're not going to get no institutional people or anything. They got to come on to the real markets. This is on the over the counter, so it's not even listed on a major market. So this is for us right now, the bottom feeders.
It's technically a pink sheet right now for us.
Correct. So we're a long way. This is for us. So Matty, with you being a penny guy, I don't think you're gonna find a better looking chart than this. This thing high.
Yeah, but the only thing I'm concerned about is if they decide to do a reverse split like Chesapeake Energy just did.
Yeah, they did. Bro, I was just thinking that because I was looking at that too. A buddy of mine was telling me that. Go ahead.
Hold on, you guys. Let me finish running this down. Let me say this about the splits. Whether it's a split or reverse split, it's just a psychology game.
Yeah.
With the company plan, because people equate value with a certain price, it's hard to sell you something that's 12 cents. So if they make it $5, then that sounds like it's worth more. It's like when a company stock costs $1,000, or when Apple, one of the times I think they went up to $1,000, maybe about like that first time they went up there. They were worried about working class, Joe Blow citizen buying Apple stock. That Joe Blow would think that he can't afford it because it costs too much, because people think that it's expensive. It's like people would rather buy 10 shares of something for $100 than buy one share of something for $1,000. That's just the way our mind works. It's like the reason why something costs $9.99 instead of $10. That penny makes a difference to you psychologically.
But the only thing you got to look out for is if they dilute the common shares and
Oh,
for
I
the
see what
market
you're saying. So you're
raising
saying
the
that they would have.
authorized share.
So
Yeah, if they change the share structure and raise the authorized share count, then your shares are gonna get diluted.
Sure.
right. So you said
Chesapeake,
they would do that, and some people would then take advantage of that and sell.
yeah, then the value of your shares go down. And Chesapeake Energy, they did their reverse split. It was $40. Now they're down to $14 now.
Well,
Yeah.
my answer to that as a technical purist is I'll see it on the charts. If it crosses my line in the sand, I will sell. I will have a defined exit plan. And if that happens, that's my plan is my security against that. But here's the thing. Here's what I like to do. The highest point between these two 12 cents areas is $1.
Yeah.
What was it? I'm sorry.
Yeah.
I'm looking at it. Last time it crossed 12 cents was April 8th.
Yeah, hold on for a second. $2.77. Okay, so when you have a double bottom, many times you're gonna go, a significant amount above this highest point. So the travel to $2.77, in my mind, that's a gimme. That's a gimme. So yeah, I like this. I like this. Let's see. So this is a daily chart. Just making sure, get my perspective. Okay.
That's a nice little uptrend right there.
Yeah. And look at your arts. And the danger is we're kind of overboard both. Okay. I put the RSI because that's what you mentioned that. I use stochastic. They both are momentum oscillators. They both are in the overboard area. They both are saying that it could have a pullback, a little pullback, but we'll see. We'll see. But I don't see it. If it came below, what's this, 15 cents? That would concern me. I can't see it doing that. But we'll see what happens. But I will this one. This is such a good play for right now. One, it's in the right space. It's in the consumer discretionary. I'm sorry, the staple space.
Right.
Okay. And so it's also we're at the beginning of, I think we're going to see destruction in the real estate market. Okay.
Right.
So home sales are going to come to a halt. Because you're going to have delusional sellers thinking that their house is worth now what they said it was worth back in December. It's not. The market value has changed, and so people are going to choose to stay in their homes and fix them up.
Yeah.
And, so when we say Sears right now, what are we really talking about? Is that do they still own, what is it, Zayres?
Well, they bought Target and they bought Lands End. I think that's the last I remember.
Wait. Sears owns Target?
No. Kmart. I'm sorry,
Kmart, not Zayres. Kmart. That's it.
I was thinking retail, but
Right. That's the store I was thinking about. Kmart. Right.
Kmart, they own Kmart and Lands End. I'm not gonna, that was a boo-boo on my part, so y'all forgive me on that. But.
Gotcha. Now, okay, I think before we get this sell, we are gonna have a pullback on this. Okay, but we're gonna get a push first. We're gonna go a little bit higher. Okay, before we get that push. So we could end up around the 25-cent area a little bit before we get a pullback. So I feel safe about this 12 cent thing holding. And I wouldn't this would be like couch money, okay? We're talking about a 12-cent stock. I'm not gonna put no big ball on no 12-cent stock. All right, we're talking about a few $100 of couch money. But for this on the play that I feel good about this thing getting back up to this 277. Okay, so we're talking from $12 to 112 to $1.20 is 1,000%. So even if I just do $100, then I can turn $100 into $1,000 just by getting to $1.20, and I'm pretty, I feel pretty good about it exceeding this 277. So come on, so I, $100. I'm really thinking that I can really flip that to be $2,000. So I would have, personally, this would be nothing to throw $500 at this, man. Just slow, take my time getting in, to buy in small increments, and I would sit on this for a minute. This is a good play, man. Shoot, $500 become $10,000.
Yeah, but I do the pennies. It's a look. You just gotta look out, see if they're doing anything crazy with the share structure. That's the only.
I hear you, and all that might be true. But what I'm saying is, the price charts will show me.
Yeah,
I will see that action on the chart.
Oh yeah, you'll be able to see it with the volume and all that.
That's it, and I'll see it with the price losing its is running out of gas. It's not moving up with the same vigor like you see here, and so that's what technical analysis is for. And I'm not, like I said, I'm a technical purist. I am not conflicted by what I see on the charts and what they say on TV. I go by what I see in these charts. Okay, so I don't care. I don't care if there is news or if there is no news. The beginning, middle, and end of the story for me is the price activity on the chart.
Sure.
Period. So I don't care. I don't care. So yeah. So this is the price is truth. So yeah, I'm an extremist. Okay, most technical traders are not extremists. Okay, most are kind of more like our brother here on the panel that combine a little fundamental with a little technical. Nope, I'm strictly technical. I'll buy a box of turds if the price
if it makes money, right?
That's right. And I'm not long term for anything. Okay, so I'm just in it for the win, for the game, and I see the price structure, and then I'm out. Okay.
Yeah.
By the way, for those that are paying attention to RSI, I just looked at the 1 month chart, and the RSI for this thing is in the mid 70s. And if you remember, I was saying that I like playing from the mid 50s to the mid 70s. So I kind of see where you're going with this thing.
I'm sorry, you said the 1 month chart?
Yeah, I'm looking at the 1 month chart right now. I'm gonna go look at the other ones. I'm cycling between charts. That's
right. Okay, because my RSI is what, like in the near 30 or something.
Okay, so what time frame are you looking at, by the way?
The monthly. You said the monthly, right?
Yeah. Well, for me,
let me see. Maybe yours is edited. Let's see. Let's check out your Are you looking? Check out your settings. Is yours on a 14 period, or did you change it to something else?
Let's see. It's a daily.
You're on a daily chart. Gotcha.
I'm on a daily.
Okay, right. Yeah, correct. Yeah.
You're on the 14 day.
Well, it's
no. What's that? No, you said monthly, but now that I'm on daily with you, I see what you're saying. Yeah, they both are a little overboard, right?
Yeah. Right now, it's saying like if I go down, let's see, if I go to like the 4-hour chart, the situation changes, and yeah. So I'm on an RSI 14, if that makes any sense.
Yeah. You're right. You're good. Yeah. You're good. No, you just I just heard it wrong when you said monthly chart. But you meant to say daily chart. But now that I went to the daily chart with you, we're in sync.
Yeah. So let's see. Yeah.
So so this is risky for me here, but
So the RSI is looking at 75. So just to let everybody know.
Right. So when you get closer to 80, that's where it gets risky,
Dicey. Yeah, dicey.
But in the long term, the fact that over a 2-year period, or let's say a year and a half, the floor has held at 12 cents.
Well, in that case, we could basically put our orders in at 12 cents and just wait for it to hit.
Well, no, I don't want to get to 12 cents again because I don't believe in a triple bottom.
That's right.
Okay, so I'm trying to want to go now.
Okay.
I'm inclined to want to get on this now. I like this one, but give me another one so I can run through these and we can shut this down. And get me a bowl of Wheaties and be ready for tonight, somewhere around 7 or 8 p.m. I haven't firmed it up with the other participants. I got some other people in my group who are crypto enthusiasts. Maybe I don't want to call them that because they're not. Nobody in my group is that we're not cheerleaders for anything, okay? But some people in my group have noticed some opportunities in the crypto space that they want to talk about, and so it's just a trade. But you know, I am dollar bullish, okay? I'm of the opinion that dollar bullishness is going to wreak havoc in that cryptocurrency world. It's going to tear it a new one. Right. The dollar is going to do some serious damage to cryptocurrency. This is just my opinion. It's to cryptocurrencies, and here's the big one: gold. Oh, it's going to beat the hell out of gold. But we're gonna see. We'll see. I know that's not a popular opinion. People got a lot of gold bugs out here, you know.
Right. Well, you know, it's kind of normal understanding environments, but yeah. Something I'm looking at actually, because I got out of it in the 30s, and right now it's 35. Something I was looking at remember I was saying that something was at an 81 RSI and I thought it was too hot. You guys can look at this if you want. It's a FSLY.
Okay, hold on for a second. I'm gonna add this to your little portfolio here. Sears. I gotta remember that next week, man. I remember Sears, man. So what was this new one?
It was FSLY. It's kind of it's let's see.
Fastly?
Yeah, Fastly.
Yeah. What does that company do?
I don't know. It's just because I just found out about it like a half an hour ago.
So you just saw the price activity in that?
Yeah, I saw the price action, and he told me about it yesterday, and I told him I'd kind of let him know about it today. And when I looked at the chart, I was like, bro, like, what are you in at? He's like, I'm in at 33. I'm like, I'd get out of it because right now the RSI is saying that it's at 81. So, you know,
take a look.
He told me about it when it was at 34.60. So
okay, I would say right off, again, I'm gonna look at this chart, but I'm gonna tell you, I'm biased against this sector. Okay. Right. It says Fastly provides infrastructure software. The company offers cloud computing, image optimization, security, edge, computer technology, and streaming solutions. Fastly Inc. is based in San Francisco, California. Okay. Several reasons I don't like it. Just first of all, San Francisco is going to be in trouble, period. Mm-hmm. That all that expensive real estate, all that stuff is going to come crashing down. It's got to, rent's too damn high. Okay, so they're starting to have layoffs. I read this week they having layoffs now in Silicon Valley. Okay, all right. So when the economy slows down, you're safer in certain areas, but nobody is really safe. Right. Except it maybe if you're in the staple sector. Okay. Now that's why I don't. My second reason for being kind of biased against this is because that computer space. Now we began this discussion with our brother talking about how he sold semiconductors. So his reason for selling semiconductors is because that if I misspeak, you'll correct me. Is that the time it's a developed, mature space in the market for where money is rotating right now. It's time to leave that area. So this is the old story. This is the mindset that fueled the rise to the top. But you will experience the ride to the bottom if you don't change the way you're looking at things. Because this space, I run from this like fire. Any gain or pop in these kinds of areas in the tech space, you can have it. That ain't my money. I don't want nothing to do with it.
Right. Right. And that's what I told him, because he was in at 33, and I was like, bro,
Run.
you,
Run.
the first thing I had to see was 81 on the RSI, and I didn't even look at the rest of it, to be honest. I could have looked at everything else, but when I see RSI at 81, I'm like, there's not much left.
I want to see. What do I want to see? I want to see volume. I'm trying to remember how to get it on this chart. Volume.
I can tell you what the volume is if you want to know. I can get it.
Yeah.
It's not much of it.
Are we looking at the daily volume, or like what are we?
Whatever you got. Both daily. Let me do daily.
Well, today's.
Oh, volume, I got it.
Friday's volume was 7.9 million shares, and the average is 2.6. So that's.
But check this out. I had mentioned earlier on another read that I don't really like it. Like when I see a big volume, sometimes that's the end of a run. When I see a big volume after a run up.
That's what it looked like to me.
It's like, okay, that thing done shot its wad. Okay, I'm out. Hate to be, blue, but that's what it is. That's what it is. Hey, I look. You just like pat this dude on the back and say, "Good play, man. Good play."
Right.
When you gonna sell? That's the question. When you gonna sell, man?
Right.
When you gonna short?
Well, that's another way to do it too.
Yeah, that's one way.
You can short it. But I want to talk to you guys about shorting. I'm much more of a guy that likes to use the inverse index to actually short the market, like SQQs.
So do I. I do the same thing. I do not short in the traditional way either.
Right.
We're talking about buying for everybody listening. We're discussing basically bear market ETFs.
Yeah, the inverse index ETFs. So SDOW, SQQQ, that kind of stuff.
Yeah, and the one that I have on this channel, I discuss as the Vegas play. I call it the Vegas play. It's the one with the pictures and dice rolling. And I talked about this before the market started declining, telling people that this was one to watch. The low here is around $38. It went up to $1,000 when the market starts. So when this is our TVIX, it goes up when the S&P 500 falls. So it started around 38, and then it went. Now here's the thing, though: it's incredibly volatile, and I put the dice on there because if you're not a trader, you should leave it alone. You should leave it alone because this is what goes up comes down. All right, and so if you don't have some skill behind you on how to deal with this thing, you don't really know what you're looking at. You don't know how to get in, when to get out, and it's like, I told people closest to me, again, everything we're discussing is, entertainment. We're not your financial advisors. We're just some YouTubers, okay? And the last thing you want to do is take advice just from some anonymous YouTubers, okay? All right? This is our opinions. I will discuss something today about what's a good, something I like, and I may never discuss it again or think about it for 6 months. And so if you go buy that and price goes to hell and you go, well, Dollar, you never said get out. It's not my job to watch that stock. I liked it today because this is, it's like twerkers. I might have my favorite twerker, but I might not visit her page for 6 months. Same kind of thing, okay? It's not a deep commitment, okay? All right. So so technically, so this is what can happen if you get it right, though. But I told my people closest to me who I know they don't know how to trade and they don't seem to show any interest in putting in the time to learn. I told them to basically get the hell out the market, period, to move their money into the money market account. Get out didn't mean sell and take your money out of the account. It meant get out of any stock investment and move it to like a money market account or something. Just keep contributing to that money market account until the entire thing is all over. And then you'll have a big mountain of money that you didn't really lose because you hid out in the money market account. Then you'll be pouring all that money into the market at the bottom. You know, but in between, you might have to sit out for, you know, maybe a couple of years, maybe 2 years, maybe 1.5 to 2 years. You might have to just sit on the sidelines. So, y'all still there? What happened? They bounced y'all, man. Y'all got ejected.
Bro, they booted me. I'm sorry. I got back in though. So yeah, I mean,
yeah, they
you know, like for the people that ain't really here like that, that really don't know what's going on, like I wouldn't be here. I mean, if I didn't know what I knew. So
Right.
I agree with you on that money market thing. You know, they can show up after all the hell is finished.
Right.
You know?
Right.
Yeah.
Yeah, but yeah. Now, if this stock, back to this FSLY, if this was not a tech stock, I would want to catch it on a pullback, but it would be on my watch list because this, you know, but knowing what industry it's in, I can't give it a vote of confidence and say I want to be related to this stock for the next 6 months or year. I can't do it, you know.
Sure.
But when we were talking in this show at the beginning, we were looking at pharmaceuticals, and that's one of those places where money runs during crisis. Okay, that's a historical playbook of how money rotates from one industry or sector to another, and these pharmaceuticals, even though they're pennies, some of them are penny stocks, but they're still situated in the right space. And so I feel that my choice is being validated by being in the area code of where the winners are, you know, where the winning money is going to be. Because sometimes, you know, folks with big money, they scoop down to the penny stock area to try to goose up their portfolio to get some
man, it ain't.
You know, man. People do something strange for the change, you know.
They do. They trick. They be out there tricking.
They be tricking over in the penny stock area, man.
If you could see the way that I'm shaking my head when you said that, bro, about these high net worth dudes jumping into these things. Oh man.
You know, okay. How all it takes is a foreclosure to take somebody from high net worth. And you know, you gotta rep that, you know, high net worth folks have foreclosure too.
Sure.
You know, yachts get hocked too.
Right,
okay.
Right. And I'll tell you something about the real estate market, because that's kind of my second job. I work in the property management industry, so that's what I do on the weekends. But now I'm doing this with you guys. You know, like this stuff about a moratorium on mortgages kind of scares me, because I remember in 2008, 2009, where you had the TARP money, and I had people calling me and saying, like, you know, well, the TARP money got passed. How do we get a piece of it? So then I would call the banks that these people would have mortgages with, because, you know, they would tell me what the mortgage note was. They would call, and I'd be like on a three-way with them. And the banks basically said, if you want access to TARP money, the loan has to be in default for 90 days in order for us to gain access to it. And the problem is, what ended up happening to those people, and I didn't tell them to do one or the other, I would just on a call listen to what they were saying, is they basically did what the bank told them to do, and then when they called the bank back to renegotiate, the bank was like, we changed our mind. We're basically going to put it into short sale. We won't foreclose on you, but you'll still take a credit hit. I saw people just lose all of their money because they thought they were in a trophy property, and they went to the penthouse to the whorehouse in a New York minute. And some of this stuff that I'm seeing with like mortgage forbearance is they're saying stuff about 3-month mortgage forbearance, but I called the banks and asked them, as saying that I had a mortgage, this, that, and the other. I lied about that, but just to get information. And they said, well, if you do have a mortgage, it's a 3-month forbearance, but on the 4th month, everything's due. So what that means is it's the same play. It's the same play. They're going to say on the 4th month, that month plus the back 3 months are due. So what are they going to do when you don't have the 4 months? They're going to go into proceedings.
Well, actually, yes. Okay, technically,
that's something they can do. I don't know.
Correct. Let me. Okay, now, all right, now everything I say from this point forward, y'all, I'm just some dude on YouTube. But let me just say this: what I know, what I have seen and am aware of from. At one point, this was maybe about. It's around 2012 or 13, somewhere in there. Prince George's County, Maryland, was leading the nation in foreclosure rate. Now, that should ring a bell. Prince George's County is the location with the highest concentration of Black millionaires.
Sure.
Okay, on planet Earth. Okay, but we had some. This is America, so So, last hired, first fired, all that stuff still applies, okay? And so the foreclosure situation was pretty bad. People stayed in their homes over a year.
Right.
Because the backlog in the courts was so great. On 2 reasons. The backlog was so great that they couldn't process all those cases in time. Another issue is that the number of people showing up for social services got to be so great. At some point, the government starts, pressuring, kind of working on your side to keep you in there for a little longer.
Sure.
They just don't have the resource to deal with this many homeless people or people showing up for one type of aid or another. And so they kind of stick it to the banks.
Sure.
And then the banks, of course, end up getting bailed out. But see, we complain about the bank bailout, but we don't mention how people got bailed out too. Because they got to stay in those homes. Some people stayed in those homes over a year, paying no rent at all. So the moral of that story is, if you're sitting there in your home right now and you don't have any money because you're not going to work or you have money, but your rent is due or your mortgage is due, don't you pay that damn mortgage. You eat.
Right.
Okay.
Right.
You can survive staying in that house a year, but you can't survive if you don't put nutrition in your body. You will be dead or sick as hell in a year if you don't eat right. You eat but I'm just some dude on YouTube. But something for you to think about. Do your own research and call up people in the financial world, even some real estate agents. They know this. Ask them, how long does that foreclosure process take? How long does it take to actually get someone out of their house? And then there's a corporation called NACA. Is it NACA? NACA.
Let me see.
Somebody type it in their browser. NACA. That's the best place to call if anybody's having issues with their mortgage, because the bank would rather lower your interest rate, okay, than kick you out. There's all kinds of stuff they can do And so, work it. I mean, I've heard of people having their mortgage lowered from $1,300 down to like $900, and the bank will make a deal with you. They'll say, look, if you can pay this $900 without missing a payment or being late for like a year, then the 900 will be your permanent new rate. And so you'll be living in your Big Mac mansion house at the same amount as if you were renting a damn apartment. So, play the game, work it.
Right.
The information. Was it NACA? Was it NACA?
Let me see.
What happens when you type that in your browser?
I'll do that. Give me a second. 1 second. I gotta go to Google first because it defaults to
while he's doing that, Matty, give me another chart symbol.
Oh, MOB.
It's Neighborhood Assistance Corporation of America.
There you go. That's an awesome spot. I mean, they have these fairs where your bank will be at the daggone fair, and they'll have the paperwork for the assistance, and the bank will be right there, and they'll negotiate the deal, and you walk out there camp with the whole problem solved. That's an awesome. So everybody need to know about NACA. Them some awesome folks. So even if there is no fair near you, that you can still, get somebody to help you over the phone there. I believe they're a nonprofit. But you said MOB?
MOBL. Remember, I was telling you I was thinking about.
That was on the list.
Yeah.
Yeah, that was on the list. Let me see. Let me bring my screen share back up. Let me see. This one, Mobiletron.
Yeah,
it was on the list, and I did look at it. And let me refresh my memory on it. What my take of it was.
All right. So, okay, profile.
Okay, let me go to.
Okay, it's a software company.
Yeah, I think they do like mobile animation automation.
Okay.
I didn't really look at it too hard.
Yeah. It's the space that it's in.
It's in Mountain View, so it's another one of those Silicon Valley deals.
Yeah. Okay, this run up here is a little rich. It needs to come back. The question with this pullback is, are we talking about a slight pullback or something that's going to continue to run higher? Or are we talking about a reversal where the thing is just going to continue going down? And it's kind of, at this point, I'm looking now on the daily chart. I could see possibly a push, or maybe a push higher. Let me look on the 4 hour. Let me pause. Let me do this.
Because I want to short it eventually.
It could get a slight push, but overall, since this run here, we're talking 309 to 536. So that's more than 50%.
There might be a little bit of meat on this one.
Yeah. It's like, but the question is like, is it worth it? So I mean, I think if somebody's getting in this for like if their view, I'm not trying to give nobody advice. Let me say, for me, as a long-term trade, let me say it's something I was willing to hold for a couple of months. I would like to see it come back down and retest this bottom and survive it. That's what so whether it goes up here and does that or falls from here, that's what I want to see. I want to see what happens when the price returns to this area. Does it hold? Okay.
I want it to fall.
Because it rolls. Check this out. okay, it started rising around mid-March with the rest of the market. So when the stock market was declining, this thing had started falling in 2019, and then it had then right here and early, this thing started falling before the rest of the damn market. Okay,
Yeah.
falling, and so when everything was good and the Nasdaq and everything hit its high on February the 20th. Okay, so all those tech stocks and the Nasdaq was hit their high. This thing was already declining. Okay,
Right.
and so when the whole industry started rising, in March, mid-March, this thing would participated in it. So.
Right.
It would be hard for me to be, it would not be logical for me to be bearish the market, including the NASDAQ and all things NASDAQ, and then be bullish this thing right
Yeah,
here.
and recommend this at the same time.
Right. So my caution, I still would have to say, so yeah, back to, I would, the most bullish argument I could make for this thing. Wait and see what happens when it gets right here, and you might have a shot. And but if it ever, when I didn't say if it returns to this area, when it returns to this area, I would see if it goes, if it ever goes below this, it's over, it's done. But I would not buy it because it's in the wrong space, and the S&P and the NASDAQ, those major indexes are overbought, and we can debate. There's debate in the market about whether the bottom is in or not, but don't confuse that debate with the over kind of, I would say it's a consensus that we're overbought right here. So we haven't come down. This market has to retest that low from mid March. So the bullish camp is optimistic that the low is going to hold. The bearish camp, we think it's not. But in the short term, I would say that there's general agreement that the price is going to go down to that area, in that, approach that area. So
that's what I was. That's what I was thinking, because I want to short it.
I would short only via these like this one. What's this is? This is only because it just occurred in my mind. This is a long one. What's the other? Is it SQQ? Is that the opposite?
Yeah. SQQ is the inverse.
This is it.
Inverse long ETF.
Yeah, the long is T. It's TQQQ.
Yes.
Right.
Yeah.
So now, keep in mind, everybody. Okay, this thing had a reverse split or whatever. No, not a reverse. Reverse split.
It split too.
To pick it up out of the dirt, because the NASDAQ was doing so well, it was beating the hell out of the bear stock. So, but every dog has its day, and this is the season for the bear ETFs. They've been getting the hell beat out of them forever, and but it's their time, And so let's see. Let me find this. Okay, check this out. I think
1064.
You on to something. Check this out. We're looking at the 2-hour chart. This is the lowest one right here. So hit the low. Let's see what's this high. 84, 86. So yeah, this is this, although this candle is, we got to see what happens Monday, but this candle is red because it closed low. Okay, but it didn't close lower than this green candlestick. So we have what's called an outside move. If it was a green candlestick, we'd be possibly calling it a bullish engulfing candlestick.
What are you looking at, bro?
I'm looking at SQQQ on the 5-minute and the 2 hour.
Okay, just
I
want
started
to make
at
sure.
2 hour, and so I saw here that the that in the, I guess that would be the noon to 2 p.m. window, it hit a price low. And
Okay.
then that next candlestick made a higher high, but did not make a lower low. So it looks like something could be going on right here in that 4 hours from noon to 4 p.m. yesterday. So going down further into the 5-minute chart, you see this low right here held this low at noon, 1240. Yeah. So this low held. Now, see, when I see volume at the beginning of a trend, now I feel a little differently about that. See,
Right.
she got my attention now. She put on them booty shorts. I just got home from work. That's a whole nother level of attention.
For sure.
That's at the beginning of the meeting, okay? At the beginning of a meeting. That now I like that volume. I like that volume, you know.
For sure.
So we got some other candlesticks. You guys gonna have to get on that Patreon to get all this game. I ain't going all into these details like this. I'm leaving stuff out intentionally. All right. But yeah, this is some positive. This is all positive, and you deeply you're oversold. So yeah, I can, and this push up even on this 5 minute or 2 hours is in the dirt. Okay. So even in this push on these lower time frames, we should break this trend, this downtrend. So yeah, so this means that the NASDAQ is in trouble. This suggests that that tech stock that we were just looking at, that's also in the NASDAQ, is in trouble.
Yep.
It means that AMD and Intel, they are in trouble. AMD, Intel, and Apple, there's nothing driving the NASDAQ more than those.
Right.
And so when you see this bear market ETF getting ready to break out, or everybody watch this, see what happens Monday, I don't have to look and see what Apple did.
Right.
AMD, because they all are included in this. Okay, let me show you something with this. This is how I trade. I trade these ETFs. I trade the macroeconomic setup. Okay, I don't go looking at individual companies, and I'm not saying that's wrong. I'm just saying this is my style because I don't want to do all that work. I don't want to do all that company research. I'm not trying to find the best needle in the haystack. I'm betting the whole damn haystack.
So were you in TQQQ over time then, bro?
During this down, I was in
during the uptrend. I'm saying, because technically that would be the other side.
That would be the time to be in it. Right. Yes. I was in something else. What the hell was I in? But I was long the market, but I wasn't. I don't think I was in. I might have been in large cap, something just general, like some triple leveraged large cap thing. I don't know if I was in. They don't tell me what the constituents. This is what you generally want to do. Try and on this chart, when they don't have, there's something, it's called constituents, and that tells you what the ETF is invested in.
Right. The holdings.
If you have it, that'll show you exactly what stocks they're holding, but they don't show you that on the short side.
Right.
On the long side, they show you. Let me see if they tell me that on the TQQQ, because if it's in the TQQQ, that would tell you what the SQQQ is short.
I can get that information for you. I might be able to find it. Holdings, right?
Yeah, or if depending on holdings, it might say constituents, either one.
Yeah, I can get you the holdings, the sector weighted.
I think I found it. It. Look at this. It's the NASDAQ 100, okay?
Right. It's the NASDAQ 100 swap.
And look at what it say. Microsoft, Apple, Amazon. Amazon is one of those weird ones, okay? Because they are a mix of things now that they own grocery stores. So Amazon is one of those companies that you have to stock price might get beaten down because they're so retail heavy. But when this is all over, Amazon should be on everybody's first list.
Yeah. Oh yeah.
You know, when I say this, I'm not talking about the virus. I'm talking, there are two trains running. We have an economic, I guess on some scale, on my 100-year scale, it would be a correction. Okay. So that would have happened even if the virus, this is important for people to get, you would have this economic hell even if there was no virus.
Right.
Okay. It's just maybe happening faster because of the virus, but this would be happening anyway.
Right.
And so you just had the misfortune to have all this happen at one time. So you got Google, Facebook. Look at this. These companies make money off advertising from corporations. Corporations losing money. They don't have the money to pay the ads. I would not be surprised if YouTube cut their ad rate that they paying to content creators simply because the corporations are not going to be continuing to pump money, you know, into ads for during a like a declining market cycle. It just doesn't make a lot of sense. So that's going, that ball going to roll downhill. Okay, Intel, Pepsi. Now this is a good one though. This is one. It's good. But before you get down here, the PepsiCo, you got all this. Now see, Netflix is another one. This shows you how the markets are irrational, but we'll see how this goes. And I want to get your take on this as a fundamental guy.
What are we looking at? Are we looking at TQQQ or? I'm
looking at TQQQ. I'm not saying buy TQQQ. The logic is SQQQ is shorting TQQQ.
Right, sure.
But looking inside of TQQQ lets you see what SQQQ is shorting.
Okay, let me go look at the holdings.
Okay, yeah, you got to go to TQQQ because SQQQ don't show it.
Oh, right. I'm on Yahoo Finance, so my
screen. Yeah, they give more better information sometimes. Yahoo does.
Yeah. All right. So it looks like right now we got Apple and Microsoft in here, but you might actually. Yeah, right now it's saying Microsoft and Apple are in here at 6.39% and 6.78%. I can't toggle to see what you're looking at. What else do they got in there?
Facebook, Google, Intel.
Okay. All right, so yeah, they're basically looking at tech heavy stuff.
Right.
They're tech heavy. Yeah.
So when you got, but see, that's the thing on television, they don't promote. Like when there's hell going on, the market is just going to hell. They don't put up symbols to show how well the bear market funds are doing. You notice that?
No, because the way that they sell it is that the market's going to go up in perpetuity.
Right.
You know what I mean?
Right. That's the way they want us to think.
Yeah. And basically they start talking about bear trends when the stock market's down 600 points. It's like, oh, well, you know, SQQQ looks like this, the semis are doing this, but their vent is not towards realism, it's towards hype. You know?
Here's an interesting one. Netflix. Now people are watching a lot of Netflix.
Mm-hmm.
The thing is, see, you're the conference call guy. If you get around to listening to Netflix, man, please come back to this channel and let us know. I want to know if people sitting at home have their money gotten so low that they can't afford to pay the $9 a month, because this is not a requirement of life. You know what I mean? It's not, you can't you can't eat it. You can you know, get Cody or some other thing, and you can find things to watch that don't cost $9 a month.
Yeah, you know, I'm going to say something on that about the stay-at-home trade, and this is something I was looking at, and it scared me. I'm bearish this market on most things, as you can already tell. Peloton reported earnings this Thursday.
That's the bicycle exerciser, right?
Right.
Yeah.
And they reported good earnings. They reported, spike in buying their BS machines because people can't go to the gym. And I'm sitting here and I see these talking heads kind of gassing this shit up and whatever. I'm like, and then I looked at how much these things cost. These exercise bikes are like $600, $700, $800, $900. I'm like, and all of a sudden, I kind of pulled my head back because have you ever been at a point where like you're watching a movie and somebody gets killed and all of a sudden you pull your head back because your body kind of jumps backwards? That's what happened when I looked at Peloton, because I'm like, how is this trend going to keep going if it's a consumer trend? And these bikes are basically being sold at $800, $900 a piece.
Exactly.
Even if you finance this stuff, how secure is the financing of this stuff?
That's what I was getting ready to bring up, that they can do the sale because it's being financed. So who's going to get stuck with it is Visa and American Express.
Right. It's a
MasterCard. Right.
To me, it's a bearish consumer trade. If you really look at it, I mean, that's how I'm looking at it. I'm sorry, but I don't see this as being sustainable.
Right.
Unless people just get tons of stimulus checks, which I'm in favor of. I don't see it happening. But even if I'm in favor of it, I don't necessarily know whether it's going to happen, because I don't make my money waiting for Congress to do stuff.
Yeah, this thing got that sign I was saying. I'm looking at a weekly chart here, and what we got is a big volume spike at the end of a run. I don't like that. I like to see my pop at the beginning, Come on now.
Right. So I mean, now you kind of understand how I look at all these trades and everything else. It's kind of.
So let's see. Tell me again. So do you work in the financial sector?
No. Basically, I worked in tech for a while, in the IT space, and then kind of jumped into real estate.
So at what point did you realize?
And then I jumped into the
realize trading or getting your knowledge of trading up? At what point did it become something that you knew was important?
I was always kind of like a Wall Street guy, in a sense. Like when I was in college, I was reading different stuff about fundamental analysis and technical analysis and stuff, because I got a minor in finance when I went to college. So, and I'll tell you something. The reason I went to go to school was to learn how to trade. But I realized going to school, you're never going to learn how to trade.
Correct.
They're gonna dump you in either an accounting department or a finance department, or
they're gonna make you an economist,
or banking or whatever else. And so I was like, wait a minute, there's no way that I can learn this by going to school. So that's when I started, watching CNBC to start with, just to kind of understand how the market moved and what made markets go up and down. Then I remember when I was younger, I would read like newspaper clippings when I was in middle school of Disney and all this other kind of stuff. So I've always kind of had it, but to be honest, 2012 was the first time I was really gearing up, because between 2008 and understanding the financial crash and all this other kind of stuff, it's like all these seeds that kind of put myself together to jump in it in 2012.
Yeah. Let me thank a few people. Thanks CL. Thanks. Thank you, Vision. Black Torch. What's happening? Sam, I am. Wasn't I just talking to you last night on somebody's chat? Somewhere here on these streets, on these YouTube streets. Okay. So yeah, what other Rael? What's up, brother Rael? What other symbol you got for me?
I really don't. I mean, outside TQQ and SQQ, that's what I'm looking at.
Oh, okay, Matt. I think Matty fell off. Man, they just kicking my people out. They're like Donald Will don't usually have this kind of activity. Something's wrong.
I'm doing it because I'm looking at the chat and then I try to go back to the regular chat and I kick myself off.
Oh, okay.
Oh, right. Yeah.
What else you got for me to chart?
TUP, the staple.
What is it again? T what?
TUP, Tupperware.
Oh, man, yeah. Let me look at that. Cause that one,
like the twos. Yeah,
man,
high twos.
Come on, I don't think we talked about this in a while, but yeah, the last time we talked about, I remember being real excited about it because I'm like, if Tupperware can't make money with oil at these prices, if it's the oil byproduct and it can't make money now, when can it make money? But listen, y'all, before I move from this, everybody needs to be watching SQQQ. Okay, everybody needs to be watching this in the coming like Monday. Watch this one.
Also, if
this is as ground floor as you can get.
Also, if you want to short the Dow, you can look at SDOW as well. So
short the Dow, yeah.
Yeah, that's another.
Well, didn't Dog used to be one? Yeah, Dog is one. Dog. No, you said SDOW?
Yeah.
Is this double leverage, triple leverage? What is it?
It is. I don't think it's. I don't know if it's triple leverage, because the triple Qs are a triple leverage.
Right. Now see, this thing had a reverse split, so it's just like messing up the chart.
Yeah.
Now the thing again, let me make the point again how dangerous these things are. Okay, so this one shorts the market. So it had a nice run up in mid-March.
It's a Dow 30 short, by the way.
Yeah, but here's the thing though. This is what's illogical about them. Why you can't hold these things? All right, it's the market top was February the 20th. So that's about here. So it ran up from, let's say, roughly $35 or, whatever this is, 90, 95, 96, whatever. We get the point. The point is, why did it go make a lower low? Okay. Right. So that's why you can't hold these things. That's why I put all this in like extremely high risk. Sure. Extremely high risk. The safest thing that again, this is all for entertainment purposes. Please consult a financial advisor. Go to your bank or credit union, especially your credit union. In fact, your job should allow you to talk. You should be able to call the company that manages your retirement account at work and see if they have free advice. You can generally schedule time anytime with a counselor there, and it's free. So type in on your internet free financial counseling. Okay, there's information out there, but the people at your bank or credit union, they're going to offer you something, and your plan administrator or the company that's administrating your plan at work, they offer you something for free. But 90% of people don't take advantage of it. Nobody calls to ask for it. So get that information. You hear some ideas being espoused on YouTube by me or anybody else. Call them people and ask them. What they think of it. What you've heard. And they'll tell you something, and then you'll put it together, and you go from there. But the thing is, although this is a bear market fund and the market declined and this went up like it was supposed to, but the market never returned to its higher high, yet this made a lower low.
Right.
So that's why these things, they really, they got to find a way to make these things perform logically.
Right.
Okay. But they don't.
Right.
So you're going to get another. So this one, so the big deal is going to be, well, this low hold that was set up on the 29th of April, but let me move on. What was that other one I was supposed to be looking at? Tupperware.
Yeah. Tupperware.
I think that it's probably on another chart. I thought my work from the last time I pulled it up would be here. It should be somewhere sitting on this resistance. Looks like we would have, like we made it. Let me look up here and see. Did we cross it? Scaling is all off. Looks pretty close.
Yeah.
We're close to an area where we could be due for a little pullback. But I like it. One, I'm biased because it's in the right space. Right. So when I'm looking at something like this, I have to work against. I have to make sure that I'm maintaining my objectivity. Okay, because it may not do what I think it should. All right, so you have to guard against that. You never know.
Yeah.
Price is going to do what price is going to do. So
yeah.
So it's $1.15 at the bottom, and we had a run up to 339. So we had a double. Generally, when you get a double, that's probably about a good time for a pullback, about 100% move. And so it would be nice to see this low hold. So I would put this in my pause category, but I like it. I mean, it could be that in my view, what's going to happen soon, we're going to start to see some separation, some differentiation in these these industries. When this market starts falling, you're going to see some of these staple stocks separate and start going north while the major indexes continue to fall. So on SQQQ and TVIX, which shorts the S&P 500, those things could end up going north. The major indexes could be going south. Tupperware may join them until they get down in this area. And then
that's why I can buy.
Is that going to happen with Tupperware? I don't know, but that's why it's in my watch list to look for it, to see if that's what's going on with it. It may, because we're talking oil being at critically low prices. People don't have money, period. So they damn sure not going to be eating out in restaurants. Okay, we got social distancing means you can't eat out in restaurants. So what are you going to do? You're going to cook food and you're going to store it. Sure. That's Tupperware. What brand name is bigger than Tupperware? Rubbermaid, probably. That's it. Rubbermaid, Tupperware. I mean, does one own the other? Does Tupperware own Rubbermaid, or what? Are they two separate companies?
I can find out.
But we got the concept. If I say food storage to you, your mind is going to think Tupperware, Rubbermaid, Ziploc. I mean, whoever owns that Ziploc bag,
right?
But we're gonna be buying more.
For sure, man. For sure.
Matter of fact, I use freezer bags. I vacuum seal them. I got all my steaks and my meats
Right.
sealed
And so,
perfectly.
and everybody's all eco aware, so they're gonna go, well, okay, I'm tired of throwing away these bags. So let me go get me some washable, reusable, microwavable Tupperware.
Blah blah. Yeah.
So if this thing can't make money in this environment, if Tupperware can't make money, and if this stock can't get no love in this environment, well, when can they make money, and when can the stock, get attention?
Right.
So
Right.
I'm biased in favor of this, but I'm gonna wait. I'm gonna wait a little bit.
Yeah, and Tupperware is probably the best play on that, on a pure play, because Ziploc is owned by Dow Chemical,
Okay.
and what's his name, Rubbermaid is owned by Newell Brands, which is
Newell. Okay.
Yeah. So the only pure play on the Tupperware space is probably Tupperware, because
Right.
I don't want to go and extrapolate something on Rubbermaid when Rubbermaid's a part of Newell and Ziploc's part of Dow Chemical. It's too separated.
So when we say pure play, we mean a company that does one thing. Right. So it's good and bad. Okay. It means that if oil, if cheap oil, if your product is a byproduct of oil, and oil is extremely cheap, so that means you should be able to pre-produce that product at a tremendous profit, damn near free, because oil is so cheap, so you got oil at negative numbers. So why, so as long as that environment lasts, the bottom line, the profit, the balance sheet of this company is going to look good. Now, when oil hits its bottom and starts to rise, this thing is going in the dirt. Okay, so we can love it in this kind of environment, but at some point when oil gets where it's going, but by that time, this thing is going, this price is going to be so high on this page. Okay, this thing fell from the $100 area. Okay, and it's sitting down here at the $2 area now. Okay, so this ain't now. What's the market cap of this company?
I can tell you right now. Hold on.
So we're not talking no penny stock, okay? Real money.
Well, it's a penny stock in name only. Right now, the market cap's 142 million. So technically, it is smaller.
Yeah. This is real money here. So this thing is going to get back up here to this $100 area, or beyond, and then oil is going to start, rising, and then the production costs to make the Tupperware are going to start to eat into the profits. And then by that time we get to that point in the cycle, it'll be time to look at them tech stocks again.
Right.
So for now, get the tech stocks out your mind, y'all. Just get over it. It's over.
Unless you shorten them.
Right. Unless you shorten them. Get that. That's yesterday's, last, February's news. So yeah, what's up? What's the next one?
WTHRH. I think that's the symbol.
Wait a minute. Is it W? Wait a minute now. I wrote this down.
Yeah, it's overbought right now.
WTRH.
Yeah, it's crispy.
WTR. What do you know about the company?
Oh, they do food delivery.
See, I wrote caution on here. I'm trying to remember what was it. I wrote it down.
Oh, hold on, I got a motorcycle. They showing off.
WTRH.
Oh, I think I know what I saw now.
It's crispy burnt.
Okay. It looks like we got like about a 50% retrace of this move right here. And looking at your RSI and your stochastic momentum monitor indicator, it looks like this thing is likely going to roll over.
Yeah.
So I don't trust it at this level. And I could be wrong, but I would like to see it. Basically, you want to buy it when it's at the over 8. prices ebb and flow. They go up, they go down, they go up, they go down. Nothing, but they go up and down within a channel. That channel is either trending up or that channel is either trending down. And so I like to buy it on the down slope within the channel. Right. And so this is still kind of at the up slope. That's if it's not rolling over altogether. So I think for me, this is a wait. And I'm sorry, you told me, but my mind slipped. What did they do again?
Food delivery. But I was looking at it, but I couldn't get into it.
What does that? What does that mean?
I think they do like Grubhub stuff.
Okay, gotcha. So they like one of these companies that would have a hookup with Uber or something. Uber type kind of. They do food delivery of different companies, different other. Stores.
Yeah. I think they got like contracts or something. I didn't really look into. I just liked the space they were in, but I saw they were overbought, so I didn't. I'm watching it so I can see if I can get in on a pullback.
Yeah, so I moved down to the 4-hour chart, and we got like this little push up right here. The volume started going the other way. We got this little inside candlestick here. Couldn't make a higher high. Momentum is rolling over. No, I wouldn't buy this right now. I would wait. I will wait a little bit. And
that's what I'm gonna do.
See if this low here doesn't hold, I could walk away from it altogether. But then I mean, the next in sequence would be to see if this low held. But that's first things first. Let's see what it does on this pullback. It is likely to go below this, but we'll see. We'll see what it does. But no, I wouldn't buy it right now. I would say this is what watch lists are for.
Yeah.
Okay.
I was just mad that I didn't catch it, weeks ago where I could have enjoyed that move up. I caught it on the end.
Right.
And I was mad at myself for not catching.
And I'll say to everybody, watch, this is what we're doing here today. This is mostly what trading is. I don't even really say trading. I call it charting, because mostly you're charting. And then when the right opportunity comes along that fits your trading style, then you pull the trigger, But so you're mostly like evaluating candidates for your money.
Right.
See, if I could have found this when Apron was going up, I could have made some money on this trade.
Right. And if you got some of us wonks, we like looking at these charts. And if you do, then you can find the good stuff. But it does take some time. It really it does take some time, and you gotta love it. And winning makes you love it now.
Yeah.
Right.
Yeah.
Remember what I said earlier, you work 8 hours for a certain dollar amount per day. You already sold yourself.
Yeah.
All right. I mean, I know how powerful and independent people like to say they are, but you have a price. And your paycheck is it. You can break that down to the hourly rate, And we go to work and we don't even like them people all that much, but we go and keep covering 25 years and then talk about strange stuff that athletes do for a whole lot more money than us. So, at least they can say they held out for a high sellout price.
Yeah.
Right.
Luckily enough, I can monitor my trades throughout the workday. So
yeah. Well, that's life in the matrix. No more. I leave y'all alone about life in the matrix. I just like to do that whenever we like we like to criticize the decisions that people make who make a whole lot more money.
Sure.
Yeah.
That money will make you do some strange stuff.
Sure.
But that's why I like to pursue this freedom and the trading game. You can rein that in. You can live your values.
Sure. Sure.
So what else was that the last one?
Yeah, that was the last one for me. I didn't have anything else.
I'm good, man. I think I'm good. Dollar Wool, you said that you had a Patreon?
Yeah.
I picked that up like 5 minutes ago. Cool.
Yeah, it's below the anybody listening, it's below this video, you know, Patreon's there. I'm trying to, like I said, I have people there that at various levels of there's a few people on there, they're there, they pretty much support me. That's what they're primarily doing.
Sure.
I appreciate them for that. And but if you're listening and you're one of those, I will be bugging the hell out of you pretty soon. Because I'm rounding all y'all up, and I'm gonna be coming for you, and I'm gonna be nagging the hell out of you, and I'm gonna push you. I know you pretty much just wanna, help me, but nope. I'm gonna get you more engaged in this game, So,
Sure.
but yeah, it's a small group right now. It's about 20
Okay.
folks, and I think I'm gonna cut it at 25. That was my initial goal when I started, to have 25 people, and I think that was the right number, because you see how we've been on here for 3 hours.
Yeah.
What I do on Patreon is similar to this, and it's like 19 people.
Okay.
It's like I couldn't handle it at 50 people.
Sure.
Because you people need the one-on-one time to get their questions answered, or you need to look and see what they're doing to see if they're making repeating a mistake, and so they need that one-on-one kind of oversight of what they're doing, and that's what I want to do. I want, because you can sit there and watch videos, YouTube videos, and I put up videos, I refer people to other quality videos on YouTube. So from being in my space, you kind of indirectly learn who the other good traders are, who are teaching good stuff.
The reason I bring that up is because I just found out about you like less than 48 hours ago,
right.
But I first kind of got into the trading space, in terms of the YouTube trading space, from a dude named Clay Trader. He's like another,
Oh, that guy. Guy's on my. He's a shorter. He'll give you the chart, and then he'll come behind the trade and short the piss out of the stock the next day when it's overbought.
Well, he's supposed to short it when it's overbought, but but anyway, I kind of got into his stuff a little bit, but then I kind of figured you out. So I wanted to ask, is your Patreon still open?
Oh yeah, until I get to 25.
Okay. Cool.
Like I said, I'm at about 20 right now. It's only $10 a month.
Oh shit! Everybody should be jumping in.
That's what I'm saying, man. I don't understand it. I do understand it, because you know how our values are, what we really think. I'm like, dude, I'm like, you be talking a 6-pack of beer. You can't even give me a 6-pack of beer.
Yeah,
man.
That's less than a pizza, bro.
Yeah. But that's where our values are, man. We'll go stand in line and give Phil Knight money for the next Jordans, but we won't spend. It's really not even $10 for me. It's $10 for you.
Right.
That $10 is nothing, because I make thousands off your advice.
Right. Yeah. That's the part that they can't connect the dots like that. You can as you people. I have people in the group with different levels of most have zero experience or background. Okay. Some are try to self-teach themselves, and you can, but you kind of need to be in a group for somebody to look over your shoulder and say, that didn't make no sense.
Yeah, you have to.
Yeah, that helps me out.
I might be jumping in there pretty soon, bro.
Oh, you're welcome, man. Come on through, man.
So just want to let you know, I didn't know you had a Patreon. I just saw this on YouTube, and all of a sudden you dropped the whole Patreon thing about 10 minutes ago. So that kind of piqued my interest.
Oh yeah, that's why you only see on my channel maybe like 2 videos a week. Man, I'm like working on. Remember, I'm a trader. Everybody listen,
Sure.
I'm an actual trader. So when I'm not trading, my priority is Patreon. And
Sure.
then I'm like, okay, you need to do something on YouTube. It's kind of like that,
Sure. Sure.
I
So
might
yeah,
need I might need to give my penny plays.
right.
Shoot.
Right. I'm
I
trying
made
to get Matty to get a channel of his own. I'm trying to push him. I got a few in the group that's in about a month or so. They're gonna need to. I'm pushing them out, kind of bringing them out more public because their chart game is getting pretty good,
Okay.
and
yeah,
and they're at
yeah.
that point where they need to make the transition from uh paper money to real money and making some of these calls online because there's a level of accountability when you
Right.
when you come online, man, and you publish.
Right.
You're like, oh man, do I really want to like memorialize that point of view?
Sure.
Because I can really come back with the stupid on this one. So, and that actually
Yeah.
makes me a
Yep.
better trader. I mean, when you put it on YouTube and when you teach other people, it makes you better because it makes you question. Well, why do I do that?
Right.
And so, okay, am I doing that just because of a habit and maybe a bad one?
Sure.
Or am I really following the rules, sound practices? So,
Sure.
yeah, it'll help you.
By the way, are you jumping on during market hours, like market open kind of stuff, or like when
I'm
do you jump?
not. I'm not often on during. I'm not often on during market hours because I'm trading.
Okay. Fair enough. Fair enough.
I'm trading. I'm looking at stuff. But it just kind of and it kind of depends. Like sometimes my attention is forex driven, and that could be any times. And other times, basically, I am a. Are you familiar with Elliott wave theory?
A little bit. A little bit. I've,
Okay,
I've, heard, I've heard the term, but I haven't researched it. So.
I am an Elliott wave theory practitioner.
Okay.
As well as let's see, I trade the Fibonacci levels as well, which is
Okay.
kind of baked in the Elliott wave theory.
Sure.
I employ a little bit of the very basics of candlestick theory,
Okay.
and I principally use the stochastic, or let's say a momentum oscillator, and of course, pure price action goes without say, but um, I am not a pure price action trader, but because I use oscillators. I'm not one of these quote naked traders, as they say, because I
Sure.
use oscillator. But I have people, or at least one guy in the group. He's very good. He is a pure price action trader,
Okay.
and you'll see him on people. Anybody that watches tonight, they'll meet him tonight because we're going to talk crypto tonight, and he's really good, and we complement each other because our styles differ, but it's remarkable how often we reach the same conclusion.
Mm-hmm. Mm-hmm.
So because
Yeah.
it's a lot of the principles correlate and complement each other.
Sure. Sure.
And so what we like to do, or what most good traders I come across are doing the same thing. We learn a few signals, and when there's like what we call a confluence of information or preponderance of evidence,
Right.
that's when you
That's
gain more confidence in the trade that you're doing the right thing.
Yeah. For me, just so you know, before I forgot to mention this. Before I jumped into the stock market, I was in the commodities space, just physical gold and silver kind of stuff, and that's when I really started learning about technical analysis without realizing it, because
Okay.
you're talking about moving averages, you're talking about volume, you're talking about a moving average breaking above uh, a historical price as being positive. You're talking about a moving average breaking below a certain price as being negative. So my building blocks in terms of technical analysis were just those basic things.
Right.
Then you add RSI and you add volume as key metrics on my chart as well.
Yeah, I'll say this in the beginning. First of all, I am just entering the future space.
Okay.
Okay, so that's like the next level for me. And what's great about for people listening, what's great about the trading futures and forex, there's no pattern day trading.
There's no PDT. Yeah.
Okay, and the pattern day trading rule it limits how frequently you can trade. Okay, because it's there. It's there. They say it's to protect you from yourself. Okay.
Right.
That's the stated reason, okay? But it limits how much money you can make, that rule. But that rule does not exist in trading. That's if your account size is less than $30,000, okay? So if your account size is over $30,000, the rule doesn't apply to you. But if you're trading an account less than that, then it does. However, in forex and futures market, those markets, it does not. That rule does not apply.
Sure.
And so that's why I'm there. But yeah. So when I started, I used just about every oscillator you could think of. Average, true range, MACD, and you name it. The chart was loaded to hell. And then I just start stripping them all away because you learn about them. You're like, okay, how many times do I need an oscillator to tell me the same thing? So you find, for me, I settled on one. I mean, I know how a great many of those oscillators, other ones work. And there are people in the group experimenting with those other oscillators, and so that I have to dust off my knowledge of that and bring it forward. But I know what's going to happen. They're going to get tired of it. They're going to scale it down. So you learn all this stuff, and then at some point you got to go, wait, okay, I need a system. I need a clean system, that I can trade. And so then you start clearing all that stuff away. You have to clear that stuff away because the price is moving nonstop. And it might take you too long to make a damn decision and you can miss the trade.
Right.
With all that stuff.
And that was one of the things that I had to learn when I first got into trading. Like, what I'm saying is, remember I told you I was watching the market for a while and paper trading for a while before I got into Netflix. When I was paper trading, I realized really early that having too many indicators would drive me nuts. So I would have two moving averages. One is a longer term moving average, one's a shorter term, and I would figure out that when one went over the other, it was bearish. When one went under the other, it was, or no, when one went over the other, it was bullish. When one went under, it was bearish, and kind of play it that way and look at RSI as a trend indicator, and volume is basically being how liquid the stock is on the trend. So.
Well, I tell you, come on through. I would love to have you in the group, and you'll see a range from on one end of the extreme. You would see me pretty much trading with one oscillator, pretty much.
Okay.
And occasionally I use moving averages also in the background, but as I'm not really heavy into that on the Patreon with the group, but I want them to understand. I'm getting them to get good at just understanding the basic price action and say that oscillator and a trend line. Okay.
Right.
And the Fibonacci extension tool, so
sure.
That's enough right there. Because when you get that down at that point, you don't really need anything else,
Sure.
So that's me on that extreme. Now on the other extreme, we got a brother in the group. Like I said, he'll be on tonight. He doesn't use anything, just the price.
Right.
And he's very good at it.
Right.
He's extremely good at it. And so I think he and I are gonna make a lot of money. Okay, because We kind of give each other confirmation.
Sure.
And that helps when you have a group,
Sure.
and especially if they do things similarly, but maybe have a slightly different approach, and then and everybody come up with the same answer.
Sure.
So
Yeah,
I mean, you'll find your spot. You'll
sure.
find your level in the group of what's comfortable for you. Like I said, some people are trading cryptocurrency. I hang out a whole lot in the Forex space. So it's all over the map.
Sure. Oh yeah.
But
I'll
technical analysis is the constant, so it doesn't matter really what you trade.
For sure. Appreciate it, bro. Appreciate it.
So what's up, Sam? I am.
What's good? Can you hear me okay?
Oh yeah. You the one sound like you're the only one with a good microphone.
This is that Yeti. Shout out Yeti gang. I know everybody's hating on the Yetis lately, but it's all good. First of all, I appreciate all the information you guys have been given, and really appreciate the conversation. I just signed up to your Patreon dollar wheel, so I'm looking forward to all the different stuff you guys got going on there. I don't know what I have to add. I was gonna join earlier because you guys were talking about SDAO, and I've been following that thing for about a year and a half or more.
Right.
And I've been up and down with that thing, but and I hate to say it, and sorry to not be patriotic, but I think you guys will understand. I've been waiting for this economy to fall off a cliff for the longest, just because from everything I could see, it was just due, and I couldn't see, the duct tape and the gum and shit holding on much longer. Right. So I've been kind of, I mean, I have a few different stocks in a couple different areas, but right now my focus is kind of like on whatever's going to be good once everything flips over. And I've been kind of disappointed. I mean, it's really good that they're coming out with the different stimulus stuff and everything. Just, people to people, I think is good that they're making sure people are taken care of. But man, it's been throwing off my SDAO trading like a mug, because, it's been coming up, then coming down, and it's like I'm waiting for this thing to go up, but that means the economy is going to have to fall off. And as long as they keep trying to hold it together,
yeah. See, this is why you need to be in the trading space, because it's like it really helps you like separate what you're hearing in the news from what the prices are doing on the chart. Or it's like the same thing. I have a bearish opinion too, and I was I'm not gonna say rooting for the fall of the market, but I knew it was inevitable.
Right.
That's so your first assignment is everybody gets a welcoming letter from me when they join. It's going to be that you watch my first video from 2018. It's the very first video I loaded on my Patreon channel. I'm sorry, on the YouTube channel. So watch the first video from I believe February 2018 on my YouTube channel, and the first video, the welcome video on the Patreon, because they explain my approach, and I show basically break down like a 100-year, just about a 100-year chart that projected the hell we're in right now. And so it was me talking in like February of 2018. I did not get it exactly right, because you're looking at a big swath of data, but that's the honest representation of technical analysis. It is not exact. Okay, it can get you in the area, and it can put the odds in your favor. So it'll put you in a position to gain most of the trend, either way, up and down. So that's the goal, and so that would be like I said, you're going to be getting that note from me. Welcome aboard, man. Welcome
Sure.
aboard.
Okay.
Because
I
we
look
don't
forward
have
to it
be
and
sad.
appreciate it.
I mean, we can be sad on one level. Nobody likes to see people lose their jobs, especially and more with the sickness part that we're facing, the tragedies we're facing. But just on the economic part, when the market is going down like this, that's a great opportunity. You'll never make money faster.
Mm-hmm.
It's the greatest opportunity. I know it sounds bad from a trader. This is Christmas every day.
Mm-hmm.
Right.
Trader, it never gets better than this, because you got a whole lot of people who have a wrong way of looking at something, and you get to take their money. I know that sounds, hey, but look, they were taking yours.
Oh, right. But you got to look at it as a Robin Hood situation.
Exactly. I'm a good guy. I treat it well. I treat it well. But yeah, that's it, man. So you got these whales out here, the richest people, and the biggest money managers. They are selling, and these people own the TV stations. Yet the TV station is telling you things are cheap.
Right.
That pisses me off.
Right.
That people don't put the two and two together. That television station is not owned by the government. That's a private company.
Right.
And you have to be in the uber 1/10% to have enough money to own a station. Who do you think is selling all this stuff?
Right.
I mean, we got the flim flam right there in front of us.
Right.
Right.
There's not, look, we can talk all this wealth transfer. It's not necessarily a wealth transfer if we don't get our cut. Money just moves from one rich person to another.
Right.
Yeah.
I mean, it can be our come up. If what's it all for? If you don't take advantage, I mean, this is your time to redistribute the wealth, or if you don't think it's fair that 1% or such a small percentage of people control most of the wealth in America. If you think that's inherently unfair, then do something about it. Learn how to trade. This is equalize that. This is it.
Exactly.
This is the come up right now. And what are you doing? What are we doing? Gotta prioritize what we how we spend our time. Everybody should be learning something right now. I mean, if it's not trading, learn something. I mean, you shut in your house with a computer. What are you doing?
Right, man. Yeah, you gotta flip them like flapjacks.
Right.
Let somebody else get the other side of the pancake.
I'll tell you something else. I think is important in this discussion. It's never been easier to make money on the internet than it is right now. If you look at trends, like people that are in e-commerce, I'm kind of in there a little bit. Are every day's Christmas for them. Period. If you look at what Shopify said on their latest quarterly call, I mean, they're basically saying they're seeing Black Friday like demand for the last 60 days. So, I mean, it's out here, regardless of whether you want to jump into trading, whether you want to jump into e-commerce. This is the best time in history to basically set it up for what you need to set it up for. Period.
What's up, brother? What the heck? What's up? What the heck? CL. I'm gonna shut this down. And let everybody. I'm gonna go around, let everybody say their parting words, and then like I said, look for me. What's up, brother DE Raptor? I'm gonna probably likely be on tonight, somewhere around 7 or 8. I haven't firmed the time up with all of the parties. So hey, let's go around. You're okay, brother. Your name is what? Iori?
Yeah. I already put my final words in, but basically what I was saying was, regardless of whatever space you're in, if you're in the e-commerce space and the trading space, this is the best time to jump on the internet and make money. Period. This is like Christmas every day waking up.
Cool. Brother, you see the on the private chat here on your page. Drop your link in this private chat so I can make sure afterwards to go and make sure you get properly wrenched.
Oh, me?
Yeah.
Yeah. Well, my YouTube name it's in the chat is this one. So.
You see the private? If you see the private chat here,
Yeah. I got it.
Put a copy and paste your link from your page there.
Sure.
That way I can just do it real quick. And Sam, I am paste yours in there too in the private chat. Go to your page.
So you're talking about the YouTube link, right?
Yeah, the YouTube link to your page.
No worries, I got it. 1 second, I'll get it for you.
And so, Sam, what you got for us on in party?
Shoot, nothing much. I just appreciate you having me on. I appreciate all the information you guys had here. I look forward to joining you guys' conversations in the future and hopefully making money with you guys in the future. And yeah, that's all I got. I'll give me a second just to find my link here, and then I'll post it for you.
All right. Welcome to the Patreon. So what's up, Matty Ghost? Take us out.
Oh, I'd just like to first say thanks for giving me advice on the technical analysis. I've cleared some good bread the last month and a half. I've been kind of on a tear, so I appreciate you kind of giving me a little direction with my picks. It's only $10, and all you gotta do is find one. Put 500, put 1,000 in, and let it ride, and then let the charts dictate when you sell. And then after you sell, try to find another play to put your money in, so you can keep continually making it grow. So
there you go.
That's all I got to say. But I appreciate it, man.
Man, I'm over here smiling real hard, man. That's the best payment, man. That you giving me more than $10 right there, man. That's what it's about. To be able to see you win, see people win, that's the move. Because I know how this is gonna go. Y'all, if y'all get this good footing right here, you can go so many places with this knowledge, and y'all gonna outgrow me. You're gonna develop interest, that's not mine, and it's gonna be sad. Y'all gonna be trading on some other camp. So I think we're gonna come there sooner than I know, because I'm just kind of stuck in my own little lane where I found my spot where I like to trade, and there's just so much other stuff out there that I know y'all gonna want to explore. So sure. I'm glad to have you, brother. So I'm gonna shut it down. Go ahead.
Yeah, I'm a bottom dweller for right now. I get the dirty trades nobody wants to touch.
Yeah, there's some manifest jokes in that, but I'm gonna leave that alone.
Yeah, I'm in the brothel. I'm down in the brothel, kid. I'm in the bottom.
I'm gonna sign out to everybody on YouTube, but everybody on the panel, stay here for a second. Make sure I get all these links and everything.
Sure.
So peace to everybody on YouTube. So check us out later tonight. And there's a good chance that I'll do something tomorrow, like an industry roundup of what the market is doing as we approach this week coming. It seems like we're on a cliffhanger about whether we're gonna go up or down, what gold is going to do, and if I can get some clarity in it where it's worth me making a video tomorrow, I will. After I look at it all, if I think I need to wait till Monday to get a clearer picture, then that's what I'll do. But so we'll see about tomorrow. But thank you for joining me today. Peace.